It's so rainy. Okay, guys, so we're in session and I am literally about to start allowing everyone in. So we're ready. Okay. Hello. Hi, everyone. Everyone that's joining, hello. Thank you so much for joining. Thank you for being part of this. Once you join in, please, house rules are very specific. Please put yourself on mute. If you have a question, kindly raise your hand and it would be addressed, or you can leave it in the comment box and we will address it. Saying this as everyone is joining, but I will continually reiterate this, but it's very important that we do that, just so that we have a very nice, very put together event. Thank you so much for joining and thank you so much for being a part of this. Hi. All right. Okay. Just gonna give another like 2 minutes and then we'll start officially. Another 2 minutes for everyone to just like join and then we'll start officially. Okay, just 1 more minute to go, and then we can begin. Okay. All right. I think we're gonna start. Okay, we have a significant amount of people who've joined, so we're gonna start. Hello, everyone, and thank you for being a part of this, and thank you for coming to this. Thank you for signing up. Thank you for wanting to learn more, listen, share, and all of the many different things that's happened the last couple of weeks, 6 weeks since we started promoting this event. My name is Vanessa Junobasi, and I am Head of Communication and Growth at Ingressive Capital. I am also convener of this event. So it just makes me so happy to be able to see all these many different people who are looking to understand, learn, and be a part of something as amazing as this event. For those that don't know, this is an early stage event that we are organizing, and we have all these many different panelists and speakers because we feel like it's something that needs to be addressed and continually be addressed in the ecosystem. Most especially because we know fully well that there's so much that is going into Africa as a whole, and Africa has been doing so much amazing things in the last year, and the conversation needs to be had, but even better, an opportunity to share all of the many different parts of things from each different ecosystem and all different parts of what exists. And we're happy to be able to organize this and have all the amazing panelists and moderators that are part of this, as well as partners, and cannot be any more grateful that this is actually happening. If you're just joining us, it's okay, you've not missed much. However, it will be important for you to just ensure that you're paying attention to every single thing that everyone is saying, because each different panel brings a different thing to the table. Without much ado, I'm just going to go straight to the point. So I'm going to introduce someone who is important to Ingressive Capital. And Ingressive Capital, I'm going to let him just do all of the intros, because just not to repeat myself or repeat everything else, but he's just going to be the one who's going to talk about every single thing Ingressive Capital has been doing in the last year, and exactly how we felt like this is something very important for us to do in the ecosystem. Not just the fact that we're doing it, but the fact that we're ensuring that moving on, that it's continually going to be a relevant part of our brand as a whole. And his name is OM. OM is VP Fund Operations in Ingressive Capital, and he's going to be just giving a quick update on Ingressive Capital and every single thing that we've been doing in the last year. So hi OM, let me know if you are here so that I can turn on your camera.
Hi Vanessa. Hi everyone.
How are you?
I'm stuck in the Lagos traffic, but
okay.
I mean the show must go on. Yeah. Hi everyone. Thank you once again for joining this event. I believe that this event is absolutely necessary because there's so many early stage founders building amazing products across the continent. And we all know that a core to building a great company on this continent is money, right? Which is where Ingressive Capital comes in. But at Ingressive Capital, we don't just believe that we need to give people access to finance. We know that there is much more involved in building a great sustainable company on the continent. And that's why we do so much more than offer money. And if you think I'm lying, you can talk to our portfolio companies, our portfolio founders. You would see that, and they'll tell you everything we do. We give them access to a brain trust of founders because we are very deliberate in how we are funding the companies. And so we've built a very rich group of portfolio founders that are experienced and are very knowledgeable. We give them access to biz dev services, access to HR services, because we know hiring is very, very important, and talent is very, very important. But like I said, don't take my word for it. Go speak to our portfolio founders. This year has been an amazing year for us. We invested in about 5 companies, some of which you know, some of which you don't know. We invested in Complete Pharma from Ghana, invested in Aboki Africa. And there's a story around Aboki Africa, which I'll get into soon. We've invested in Meko Auto Tech. We've invested in Payday, which is in East Africa. So you can see that we are very sub-Saharan focused. We're not just investing in companies out of Nigeria. And so the story about Aboki Africa and why it's a unique story and it's a win for the ecosystem. We all know, like I mentioned, that talent is a big problem on the continent. And the only way to build a good talent pipeline is to build a strong ecosystem. And so we spun out Ingressive for Good, a sister company, which is focused on increasing the earning power of the African population, the youth population, through tech. And Ingressive for Good has been amazing in the last 2 years, last 1 year plus. They have over 100,000 people in their community, trained over 80,000 people, which is quite amazing. And they even have a women-focused program and trained 2,000 women, if I'm correct, in various programs in data and in design. And they have about 20,000 university students in their community. And the reason why I mentioned this and why this is important is because we have this ideology of catching them young, right? And that's how we got the founders of Aboki Africa. Aboki Africa founders, ID, and the other guy, which I've forgotten his name, were part of the campus community.
Femi.
And yeah, exactly. Yeah, ID and Femi. If you're here, I'm so sorry I forgot your name. And they built out an amazing product that is going to be way bigger over time. If you don't know about Aboki Africa, please just go to Aboki.Africa and see what they do. Amazing, amazing, amazing product from people that started learning how to develop as students. So, I mean, what is in the outlay for us as Ingressive Capital? We are about to launch our fund 2, and we're going to be investing heavily in very early stage founders. So if you know an early stage founder, if you are an early stage founder, check for updates on our website, go to our website, apply on the form, reach out to any member of the team. We are very, very open and we respond as fast as possible. And we're very friendly, to be honest, we're very friendly. I'd like to help out as much as we can. We see us as a partner in your journey. And so at every stage that you need that push, that funding, just know that we're there for you. Thank you.
Thank you so much, and if he didn't make it clear, it pretty much just like the fact that everything that we're doing, including our partnerships, including our relationships, including our including just planning this event, is just edging towards the direction of like we're trying to ensure that we are very much there. We're very much we're tying into the pipeline, and we believe in the tech ecosystem that exists in Africa, and we really want to be a part of that. But we're also not doing it just for us, hence why we have partnerships, because there are multiple different like opportunities that exist in the ecosystem. There are multiple different programs that you can be a part of in the incosystem. But the thing is, if you don't know, who's going to tell you? And that's what we're trying to do here, which is ensuring that you not just know about Ingressive Capital, but all the different other parts of it that exist. And thank you, Wen, for trying to explain. And one of the great things that I like that he highlighted is our pipeline conversation, which is happening from Aboki Africa all the way, which came from I4G all the way to IC, which is Ingressive Capital. I'm gonna leave those conversations to happen when it comes to like the panelists, and to ensure that we're really timely, because I know everyone has a lot of if you're not on mute, kindly mute yourself. I would not like to take you off of the call. It's very important that we stick to house rules. Please mute yourself if you're not on mute. If you're not speaking, kindly mute yourself. House rules. Kindly mute yourself when you join the call. If you want to have a conversation, you want to ask a question, raise your hand or send it to the chat bot. We will respond completely. Please, let's make this a very nice and put together event. That would be nice. Yeah, so just going straight into it, I am going to introduce the person who's going to be moderating the very first panel, which is talking about like it's a founders discuss, and pretty much like from, you know, bootstrapping to seed round. And the moderator is no other person than David. Daniel. David. And then David is someone who I've known him actually in passing, but we've not been friends, but we've known each other. And he's someone who is really like a communication strategist. And he's been significantly like, you know, done some amazing work at like multiple different companies. He's currently, you know, communications leader at Nestcoin and managing editor at Breach.club. However, he's also worked at like, you know, Business Insider. He's also worked at Ventures Africa. He's worked at Tech Cabal. He's worked at TechPoint. You know, he's also like a media and journalism like fellow at like, you know, Charles Koch Institute. He's like he's very multifaceted, and I cannot think of anyone who would be able to like deliver this moderation better than someone like him, who understands what it is to be in the ecosystem. One, on the other end, someone who also knows who's seeing the intricacies of it and knows like the kind of questions that would come up when it comes to founders and founder related conversations. And so we have David Lincke coming up, and he's going to introduce the people on his panel. Hi, David. How are you?
Hi, Vanessa. Thank you for the glowing for the glowing.
I did not say anything that you did not do, but okay.
Thank you. Hello, everyone. You're welcome to today's event. I really hope that you get value for your time. So we're supposed to have 3 people on this panel, but one of our panelists is not available because for some reason, so some personal reasons. So we have on this call, if I will call it that, Francis. Francis is the co-founder and CTO at 54G, and we have Folayemi Augusto, the CEO and co-founder of Tex Africa. Hello, Francis and Folayemi. Please show yourselves.
Hi, guys.
Hey. Francis is going to tell us that. Sorry, I just need to like make a little amendment. It's VP Engineering.
Oh. Okay.
No. Don't worry. It's not you. Don't worry, it's not you.
Right.
Just going to give us a little amendment. It's VP Engineering. So yeah.
Okay. So great to have you guys doing this with me. I'm just going to go right in. I think the biggest and the most interesting question for me is the question I'm going to start with, which is about funding gaps. Right? There are funding gaps in the ecosystem. I don't think we can't deny that. But where would you say the funding gaps are, number one, and what are the creative ways that founders can collaborate to bridge those gaps so that they're not solving the problems alone, instead they're solving collectively as an ecosystem? So first of all, where are the funding gaps, and then what can we do together to bridge the gaps? Folayemi, do you want to start?
I don't always like starting, but I'll try. So there's 2 things I think about. One is, I think funding for, can you guys hear me?
Yes.
I'm getting some feedback. I think funding for non-technical products. I mean, my product is technical, but I've heard people that are starting like non-technical products. Maybe it's like a food business, or let's say a clothing startup. Those struggle to raise funding, unlike people, let's say, are building a fintech or a bank or other technical products. I think so. That's one funding gap. Then the second funding gap, I think, is sorry, that's someone that needs to mute.
Mustafa Noah.
Okay.
Please, we need you to mute your mic. Sorry. Sorry about that. Please go on.
I'm sorry. So I'm so sorry. I'm just going to reiterate. Sorry, I'm so sorry. Sorry. Please, if you actually enter the room and you do this again, we're going to take you off of the call. Sorry. Just wanted to say, if you do this again, we're going to take you off of the call. You cannot be interrupting people's thought processes like this. Thank you. Exactly. And buy drinks for all of us.
I don't like bullet, so you can buy another one for me. And early stage funding. So I think after you raise, your first round is like much more difficult because you're trying to convince other people to take a bet on you, and they don't know if you're going to actually fizzle out. Even, I mean, that doesn't mean that after you raise your Series A or your Series B, your business can still fail or you won't succeed. But I think the first ones are much more difficult because it's like you just have an idea, or maybe you have very little traction or you have pre-revenue. So over to you, Francis.
Okay, so
Francis.
I think about it in multiple lights as well. Also, maybe because now I angel invest, so there's being on the other side of the coin. You also get to see a different perspective, right? Which is investments. The person, you also need to think around why, when somebody's investing, he also has an end goal, right? So if you think like what she mentioned, obviously, clearly, there's a lot of money entering into tech or product-based companies as opposed to traditional-based businesses in that sense. And it's also about what is the trajectory if I'm investing in those businesses for the potential outcome for that investment, and what does that outcome look like, right? So that obviously is one critical conversation a lot of the time we still need to have, because a lot of the time is not necessarily, even before there was a lot of focus in tech, there was a time where oil and gas and there were a couple of other sectors that were very huge focus in that sense. At the end of the day, the investor is trying to maximize his return. That is really the goal. He wants to maximize his return. And a lot of the time he's also trying to see whether he understands the space and the sector and what value that business is trying to deliver. Because I believe that it is not just investing the capital, it's what is the additional value, just like what UM and the guys at Ingressive have mentioned, that you can bring to those businesses, right, in that sense. Another area that I think that is a lot of gap that everybody spotlights that is very clear is how do we support a bit more women-focused or female-focused founders in that sense, right? And being very intentional about it, right? And I think the intentionality is the key part around that kind of conversation, that people can say, hey, we are going to be very intentional around trying to invest and back those kind of products. The other thing I've seen as well is cycles, right? So if you look at like a lot of the landscape, there's a lot of like fintech. Everybody's building. Now you open any deck, you can almost tell there's another fintech play. Somebody else is building the same fintech that the other fintech is building. And there was an interesting joke somebody made on Twitter a few days ago that is at a certain point, you can almost even throw any color and you can almost tell what, like everybody's just within the space, right? It's like, it's another fintech, right? And I think the problem a lot of the time is there is a lot of other sectors that potentially are not getting a lot of that kind of investment. And for the longest time, healthcare didn't have it. Now you start seeing like healthcare is getting the investment. EdTech is not having, now there's a little more attention and interest happening in EdTech. At a certain point in time, it was e-commerce. So you see that trend where some sectors there's like that boom and bust happening across sectors where people are trying to move. But there are also some sectors that have probably never even gotten any attention for the longest time. I think what starts happening now that can help is finding a strong player that has a lot of pedigree to kind of try to unlock that first move and show that pathway in that direction, in that market. And once there's already a proof of an opportunity in that space, then you gradually start seeing a lot more investments gradually start following in that direction, in that sense. There are a few more, but those will like a couple of the ones I can quickly highlight in that sense. So I don't spend a lot of time just rambling. Yeah.
So we've identified these gaps, but the other part of the question is there something that we can do collectively? And when I say we, I'm referring to the founders within the ecosystem to bridge those gaps.
That's a very interesting one. I think one of the things I believe is that one, as a founder, the goal is focus on the business, right? Because and find investors that understand what you are trying to create. I think at the end of the day, that's why you see every investment firm that are, they are sector agnostic. They don't really care what sector you are. They are they are backing the founders, because fundamentally at that very early stage, they know that if what you are trying to build doesn't work, you will figure it out. You are able to evolve and find the right opportunity for that investment they've given you. And that really is the job, because early on, you don't even know what the right solution is. You have an idea that you're trying to fine tune, and you end up figuring out that after several transition or several conversations or activity, what you started off with, a lot of the time, 6 months down the line is not even what you are offering in 6 months' time anymore. So I think the key thing is, if you're thinking about investment or you're thinking about trying to raise money, one, obviously focus on your customer, because those are like the real people you are delivering value for. And any investor that is obviously going to back you wants to see that there is demand for what you're trying to offer. At the end of the day is what's that growth path? What is that journey? And if they cannot clearly point that picture, if you cannot clearly show them that story, or if they're not already experienced enough to already see what that could look like, then it becomes difficult. And I feel like that big part of that is storytelling, right? In some sense of also saying, how can I also paint a picture of if this already exists in other markets that are already very successful? And then, so where you see, I remember in the early days where you were seeing people saying, we're the Uber for this, we're the Uber for this, because it was easy to create that association. So find ways to create association to say, we are like these guys in Latin America or in the US, right? Look at how large they've grown. Look at the opportunity and how they've grown in that other market. Because at the end of the day, the investor is trying to find that alignment. Okay, what does this look like, right? And at the end of the day, if you are focused on what you're building, if you are able to share that story, I think a lot of the time as well, people also start talking to the wrong type of investors at very early stage, right? Are you able to even garner your angel investors that are very early on, that are giving checks instead of even trying to go after like VCs? A lot of VCs now are coming very early on, unlike before where they'll wait for you to have a lot more traction. But at the end of the day is find the right investor or team that believes and understands the space you're trying to play with, and find to kind of back that idea that you're trying to build. I think at the end of the day, we think collaboratively. I think the other piece is find ways to build relationship. The ecosystem is kind of very also supportive, right? So if there are ways you can grow by partnering with another startup or having conversations, most of the people on this call, we've had conversations at one point in time, and that is just how it should be. So figure out ways you can create exchange value as a way to grow quickly. And that growth is the proof in the pudding that you can show to that investor to say, hey, we started 2-3 months ago. We've been able to acquire this number of customers. This is how we are growing. This is how we make money. This is why we are the team to build this idea. This is why we will win building this idea. And if you're able to tell that story well enough to an investor that understands the space enough, hopefully you get the money, right? I remember a few years ago, it was a lot more difficult raising that money. Today, people are closing angel rounds or even pre-seed rounds in a matter of hours. It's interesting, right? That now you can raise money relatively easier than it was 3-4 years ago. And I think it probably will get much more easier in the coming years. So just find the partner that aligns with where you are trying to go. And but Fola?
All right. I want to, so because we don't have as much time as I would like, but I want to ask Fola this particular question, right? So what are this is in terms of fundraising, what are the 3 inflection points in your startup journey so far? I mean, you have specific challenges along the way, and how have you been able to solve those challenges? This is particular to fundraising now.
So like when you say inflection points in terms of fundraising, or
yes,
more
in terms of fundraising. Yeah.
So obviously,
or if you want to speak to it more broadly, no problem.
I think I'll probably speak to it a bit more broadly, and I'll speak about fundraising. In terms of fundraising, I would say obviously the first time, like the first person invested in us, I'm like, really? Someone's giving me money to build this? Like now I can't just say I'm not doing it again one day. It really, like when you have like the confidence of other people, I mean, beyond believing in myself, other people see the vision of what you're trying to do, that is very important. And this is something that I kind of like struggle with in the beginning. When I'll speak to investors, I've been telling them about what we're doing now and how we're going to do this, and how we're going to fix this. And I feel like investors, that's too granular, and they don't really care about that particular thing. They want to see the big picture, like where are you now versus where you're going to get to. So learning that was a key inflection point for me, and it really changed the way I spoke to investors and made more people believe in what we're building at Tix. And more generally, another inflection point was when we hired our first non-engineering role, because we're a team of just engineers building this product. So hiring for a first non-engineering role made me see that, okay, we're growing and this is becoming bigger than just like people building the product. We're hiring people to market, tell the story, and things like that. Then I would say another key inflection point for us was the COVID-19 pandemic, because we're in the event technology industry, and seeing how so quickly, your prospects can change very fast. Reminded me that in a startup, it's always the one, never get too comfortable in your product or what you're building. And you always have to be thinking about if, for example, I think about like, oh, if this thing was wiped away today, what are you going to be doing next? And I would say one more was November 2020, like seeing recovery, even though we're still in the pandemic, but seeing our numbers beginning to go back up. I was like, okay, like a crypto bro, we're going to make it. And and that was a point for me. I was like, okay, we can still do this, and we can make it out of COVID-19. Yeah.
Okay. All right. Thank you very much. So this is for Francis. So when you're investing for total return, would you agree that most investments do not factor in humanitarian support? And yeah.
I think that if you think so, there are investments that are very specific from that very humanitarian angle, right? But I think that how I see it is every investment that you make, especially into a startup company, whether you like it or not, is creating a job, is creating an opportunity to chase that idea. So in some sense, you're already creating value and opportunity in the ecosystem because you are now creating that value. The goal will then be, how are you supporting those other goals? Remember, like I said, it's also alignment to what the investor's critical goal is. There are investors their goals are more driven towards solving those kind of human-driven problems or societal problems by default, right? And what they would do, or when they are even investing in you, they are even going to make it very clear that you are expected to actually hit or achieve some of these critical goals, or they are investing in you because you solve some of those critical problems, right? But there are also investors that they are investing in you because they are looking at, yes, this is going to create a lot of jobs. This is going to solve a fundamental problem, right? You're investing in something that is making transportation easier. That is creating jobs for the people, but it's also making the lives of thousands of potentially millions of other people a lot more easier, significantly in the entire environment in that sense. So I think in a way, there's always a ripple effect for every investment that is made because the people are getting hired. If they're able to deliver the value that the company aims to deliver that value for, it creates a lot more ripple effect in the ecosystem and in the economy. But then, like I said, there are also investors that are very specific. So if you're looking, hey, I'm trying to solve for climate change, for instance, you also want investors that are aligned, because you're not looking out for the guy that is just like, hey, I'm looking at where I'm going to put my money and make 10x or 50x, or this could be $1 billion opportunity. And he's not necessarily concerned about the environmental impact, which is very strong or critical for you, right? So I think it's just, you also need to be very clear around what am I aiming for, what am I going after, and finding investors that are aligned. That alignment is very critical. Just like how you find employee business alignment, co-founder alignment, there also has to be investor-founder alignment, very critical. Otherwise, you will run into issues in the future.
If I can just quickly add to that, that's something I do when potential investors reach out to us. I want to reach out to an investor. I go on their websites and I look at their portfolio companies and see, is there a synergy between what we're doing and the kind of companies they invest in? And also, I do due diligence on my investors. Before I collect anybody's check, you always have to find out from other people who they have invested in to know if they are the kind of people that are going to add value to your business or they're not.
I think that's a very good point, because also one of the good things about being a journalist or a former journalist is you hear stories of certain types of investors with certain types of practices. They're not the best, but because people don't necessarily go public with some of this information, it's not out there. If you don't ask, you won't know. So it's very important for founders to do their due diligence on investors as well. I want to ask you this question about building partnerships. How do you build partnerships, and how do you leverage them until money comes in? And this is, again, in relation to investing and fundraising. Mm-hmm. So what's your own playbook like?
So my own playbook is that at Tix, we're building a product, event ticketing, and people can go on our website to sell tickets to their events or buy tickets for their events. Beyond our product, we have our core infrastructure that other providers, if you are a fintech app, you're a banking app, lifestyle app, you are enabling your users to sell products within your app. They're selling t-shirts, services, etc. Do you also want to sell event tickets? So it has to be thinking about building infrastructure as well, that you can help power other things within the ecosystem. So that's the way I think about it. Products on one hand, infrastructure on the other hand, and how can you make partnerships to help push either one of those things. I don't know if that was very clear.
Yeah, it was. I mean, is this something you can go deeper into? How do you identify the people to partner with, number one, and how do you define the terms of the partnership, and then how do you define what you want to get out of the partnership?
Okay. That's a very tough question. of this, but so I think about it for me like in two ways, like product or infrastructure. Can this company benefit from using our infrastructure to reach their audience or expand the users that they're currently reaching, or is this something that would help us bring more users, increase revenue, retain our users? And that's just broadly how I think about it. One is usually like on a case by case basis in terms of partnerships. I don't know.
I think,
Francis, do you have anything to add to that?
I think the one word I will add is value. Find where the value spot lie, right? If you are seeking a partnership, you should already potentially think around, this is possible value I can give to this partner, and this is possible value I can get out of the partnership, especially if you're the one initiating the conversation, right? Be very clear around what you are aiming to gain. And I believe that for a very early stage, one of the great things about partnership is you can use it to scale significantly, right? If you find a partner that already has, let's say, they have access to the kind of customers you want. If you're able to say, okay, you know what, what might I provide is significant value that your ecosystem will benefit from. We can layer this relationship in such a way that you get maybe a cut of that transaction or whatever it is they get out of it. But then immediately, instead of me trying to acquire one customer at a time, I can onboard you, and using that relationship, onboard 5,000 customers that are already in your environment, your ecosystem. So the same energy and effort I would have used to acquire one, if I'm able to close this relationship, I can acquire 5,000. And so that is how, in a way, I think about it. At the end of the day, it's a clear case of find what the value is. If there is clear value in that exchange, and they are aligned in sharing that value, because they may be clear value, but they're also not aligned in possibly exchanging that value. But if they're also open to engaging and sharing that value, then yes, go for it. At the end of the day, it has to be win-win on both sides. It can't be, oh, what is in it for me? You also have to think around what is possibly in it for the other partner as well in that sense.
So is it fair to then say that especially if you're just starting out, value is how you build leverage? That's how you when you're approaching investors, or if you're approaching partners and you don't really have much to sort of bargain with, the value or the potential value that your startup is going to provide is how you build leverage for yourself. Is that a safe assumption?
So I think it's tricky. I think that how I see it is, it shouldn't even just be pure potential. So there's a lot of value around, right? And if the value you are trying to provide is value that is commonplace or value that they can easily also get, the question they will ask is, why will I want to depend on you for that value, right? So the value should be something that it is a key competency that you have, either that you're already building, that organization possibly doesn't have, or is also not their core, but it improves the entire experience for their own audience or something like that, right? Because at the end of the day, if it is something like it is, oh, I can help you, I don't know, I'm trying to look for an instance. Let's say, for instance, let's imagine like email delivery, right? I'm saying, okay, I've realized that in the industry, a lot of people, email delivery failure rate is like 70%. I've built this technology that can help you ensure that you have a 99% delivery rate. That is clear value. Or maybe the person I'm even offering it to has customers that have that problem. So I'm selling it to an Amazon, that now Amazon now offers it to all of his own customers. But because Amazon has that value to his own customers, we can have like a revenue share relationship. And behind the scene as an infrastructure, nobody necessarily needs to even know that I exist. But I'm providing significant value to this partner. I have significant transaction activities going on. Like I said, at the end of the day, if it is something that they can easily replicate, the likelihood is that most people will attempt to just build it without involving you.
All right, thank you so much. So we have one more question before we start taking them from the audience, and I want to ask the both of you this question, but Fola, you can go first. So for early stage founders, how do you advise investors to attract early stage founders? Because I feel like maybe in the past, the conversation was often skewed to the in favor of investors. Investors were the short callers, but now it's more likely that there are actually investors looking for companies to invest. So, advice for investors now: what should they be looking at to attract founders to come to them? Ola, you can go first.
So I'll say the first thing is money. Like
very good and very true.
Money, because many investors, they say they're investors, but they're investing, let's say, time in your startup. They're giving you resources. They're investing. When I say time, they're investing mentorship. So it doesn't always come with money. It comes with many other things except money. So I think one of the things that early stage founders need, first of all, they need advice. Definitely, it's very, very good to have like a sounding board of people who you can come to and like. Why is he always one out?
Abasta Ama, please, we need you to mute your mic. Abasta Ama. Thank you. Sorry. So
first thing is money, and with that money comes like friendly terms. So people should not be giving you $15,000 and asking for like 50% of your business. So if they are going to have like a fixed deal, the deal should make sense. If there's other ways they can support another thing early stage founders and early stage investors can do is help with introductions for follow-on rounds. Like I find that to be like the most valuable from my current investors. Investors that refer me to other investors. Investors that, let's say, have network partners or things that you can gain. Let's say they're giving you like cloud credits or those kind of things that really help you in the early stage of your business, that help you pay for things without having to put out cash. Those are like just like small things that like people that are just starting out really would appreciate. I think there's a lot more, but those are the ones that come to mind that are like
so money and introduction, very important. All right, Francis, how would you answer that?
If I have anything else to add, let me think about it and then I'll add it.
I think I will just add for what she said, and I think yes, obviously put in the money. If you invest early, quickly make a decision around whether you are in or out, right? Because at the end of the day, a lot of these companies don't have a lot of that resource, so you don't also want to keep them lingering for too long. And because and I used to tell founders, until the money is in the bank, there's no investment yet. It's still conversations, right? So that's one. Invest quickly. If you are aligned with where they are going and you think you like it, put in the money and move forward. Two for me will be obviously, like you mentioned, do the introductions, whether you're introducing upward or introducing in the same round. So sometimes as well, when I invest, I also introduce that same portfolio company. I'm say, hey, there's a company that I really, really like. And I tell a couple of other guys from funds to other angels, say, hey, there's this deal that I think is great. And that is like how a lot of deals go around. So because as you share deals, other investors also share deals with you. So whether you're sharing up to for their next round or even on the same round, if there's still opportunity that, hey, you can share around to other investors to say, there's this deal that I'm doing, I think it's great. I think you guys should take a look at it. I think that is obviously very critical. I think the other part as well is, like you mentioned, not necessarily mentorship, but more around that. So like I said, it's a relationship, right? So even you as a founder, as you are growing or whatever the challenges you are facing, how do you leverage your investor, both from their learning, from their network, because it is not just only for money. They could also have network to the partners that you could possibly want to also meet. So you're trying to build a partnership with a company, but you don't know anybody there. The investor might have a relationship with somebody there and they can make that soft introduction. They can even help you walk through the process. They can help you when you are not sure around some things to help you dig through those details and find how to approach it in that sense. So leverage your investors, not just for their money, but leverage them for their network, both for money, but for partnership and for every other thing as well, in that sense. So yeah.
All right, thank you. There's
so can I add one more thing?
Yes, please.
I said, ultimately, as an early stage investor to the founder, you should be helpful, because most times early stage investors, there's that human touch, maybe personal investors, maybe individuals, they could be angels. Unlike when you start getting to your later stage rounds, you're dealing with institutional investors, and they don't have that time or space to be having those conversations with you. So being helpful is very, if you could just put it with one word, be helpful. Be helpful.
Mm.
And yeah.
All right. Thanks. And this last one is for the book. As founders, do you ever feel, or how do you deal with survivor's guilt, right? And like, how do you handle it, or do you ever feel it? Because
survivor's guilt, as in your business is still here and other people are not,
or the fact that you raised money and like there's like thousands of other people who have tried and failed. Does that ever occur to you, or does it cross you? Or you're just too focused? I've raised money and I need to solve my own problems.
Francis, do you? I don't. Let me think first. Let me hear from you first. You're on mute.
Look, at the end of the day, is double down, right? Because the way I think about it, and I tell people, I say, look, the moment you raise money, everybody's celebrating, but you know that you have a ticking timer behind you, right? Now you have to move really quickly, grow really quickly, and show the value for the money you've raised, right? And because that also guarantees your ability to raise the next round and the following round. You don't want to now be at that point where you're not able to raise. Obviously, there are several schools of thoughts of whether you want to continue raising or not. But at the end of the day, if you decide that you might need additional capital to explore that opportunity before it matures a lot more fully, then you need to show real growth. So at the end of the day, if you are raising that money, the next thing is double down, focus on the work and do the work, right? And a lot of the time what you even see is by the time a lot of startups are announcing their fundraising, they've already done a significant amount of work behind the scenes. So raise the money. Yes, whatever is going on, pipe down and do the work. But obviously still keep a radar of what is happening in the environment, in the ecosystem, because you start seeing new players emerging that could be possibility for partnerships. You could see new players that are even competitors. But the way I see it is not, so the way I see it as well, it's not necessarily competitors in that sense. Obviously you guys are in the same space, but it's more a confirmation of what you're doing. Because if there's also another player, let's imagine there was none in that space. Now there's you and there's another player. It's also confirming that there's a lot more interest and opportunity in that market, right? And the goal will be, how can both of you collectively or as more players come in, build that market in that sense? So yeah, just focus and do the work. Forget every other person.
So now we're going to start taking questions from our audience. Lucian, we're going to come to you. We have 2 or 3 other questions. This one is for Folayemi. You mentioned that investors were giving you money to build your products. Can you tell us about this? How were you able to get investors to give you money to build? And who were the investors who decided to take the chance? This is from Glory Jerry.
Okay, so let me clarify. When I say invest to build, I feel like we're always building. We never stop building. So it's not like we got investments before we had any products in the market. No, we actually were in beta before we collected any investment from any investors. And how do I convince investors to invest? I tell them the story of how I have been organizing events since I was in university, and I was on part of the team, and we did this J. Paul concert and like events. I'm very passionate about it, and I get the idea, and I know the problems they face and how we're going to help event people solve those problems. So I sell them this dream, which is true, and if they see value in it, then they come on board.
Francis?
Okay, I think like she's mentioned, when you are investing very early, yes, there's this big, beautiful idea, but at the end of the day, fundamentally is the founder or the founders. Who are they? What's their pedigree? Why are they the best people to build or to solve this problem, right? What is it? Because from a personal pain, do they have the experience, the background to be able to tackle this problem? Are they aggressively going all out for this? Are they hungry to actually solve this problem, right? Because you need that ownership that is going 1,000% again, trying to solve that problem against all odds in that sense, right? And I think to our point as well, a lot of people also like, oh, I have this idea, give me money to build it. There are a couple of venture building models that support that, but a lot of people will be like, and I tell people in my own school of thought as well, is that you don't necessarily need to have built an extensive product, because people will also say, oh, I want to build out this massive technology and I need money to build out that technology. I'm like, find the leanest possible way. It could be a Google form. It could be find existing ways or crude tools to test that what you are trying to solve for, that is demand, that is need for that solution. If you can already show that, I've seen people that were, hey, we've not built our tech, but we've tested that we want to, for instance, I want to give loans. Okay, obviously the goal will be I use my technology to do that credit scoring and all of that, blah, 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 and I give you the loan. But I've done a crude way, maybe via WhatsApp, you fill a Google form, and then I call you on WhatsApp and I score you, whatever the case is. And in 3 months, I've consistently given out money to 200 people and they've all repaid back. That is data, that is proof in the pudding that there is demand for what you're trying to solve, and this is how you can possibly make money. You can then raise money and go build the technology. But at the end of the day, if you can't even show me that there is any demonstration that there is demand, that there is need for what you are building for, nobody will give you the money to go start doing experimentation. But if you can already show, look, even without my technology, there is already demand. Somebody is already paying me. His phone call is WhatsApp, but it's already being paid today. So if I use my technology, it can become a lot more faster, better, easier. Okay, I will give you money to go build that technology. So at the end of the day, think about, at the end of the day, like I said, it's value. If you are delivering value, somebody is already paying for that value, no matter how small the customer audience is, if you can show that, people will give you money to go build your technology. You don't have to build all of the technology platforms we use today. If you look at when they started, you will probably be like, what? Is this what they were using? So do not wait to build that. There's never a perfect product. Whatever you have that you can quickly use to test, get out there, test, and see that there's demand and there's usage, and learn. Take those learnings and you can go use that to raise money.
All right, thank you so much. We have.
I wanted to say something. And if you're already building and you're thinking about an idea, you don't have to go out and build the whole thing before you test. You can build something very crude, and that's like something we have done at Tix, and you can use that to test it. And then if it doesn't work, you can quickly pivot away from that, as opposed to like wasting time and resources, going very deep down this line, then releasing it, then realizing that, oh, no one really wants this.
So you have to do a lot of experimentation.
Yes, that can happen quickly.
So what are some of the things this is from Najim, what are some of the things you wish were true of angels in the ecosystem, in bracket, apart from more of them with more capital? Or what needs to improve about the angel and seed space? I think this is for Francis. Yes.
I think there are a lot of angels. I think one of the things I'm really, really excited for now is that we are gradually seeing a lot more founders that have gone through the experience and the hustle and what it means to raise funding, gradually start investing as well, right? So there's a lot more ripple effect where you found founders or executives at large corporations looking, either investing or looking for ways to invest. I think maybe what is missing, which a lot of what most people know about, is the very like the VCs or the funds that are very, very structured, or some of the founders that are very, very prominent on social media that are very, very vocal. But there's a huge plethora of founders and executives across the continent investing. I think one of the things is, I know there are a couple of lists trying to consolidate that at the moment to make it easy for people to find all of that, but it's still relatively very difficult. So it's almost like a relationship game where you obviously want to keep talking and say, hey, I'm raising money, and maybe somebody that is an angel that you know will then start helping you with some of those early introductions. So it's very difficult to find that plethora actually around angels. It's easier to find like the VCs, but there are some funds that are a bit more well-known, but there is a lot of people that are angel investing, either through syndicates, investing directly, investing through funds. It's just that it's difficult to find them in some sense, and not everybody is as vocal about their angel investment portfolio in that sense. So I think that discovery is still
more visibility.
Yeah.
More visibility. Yeah. All right. Lucien, I think you can just go ahead to ask your question now. Your hand has been up for a while.
Yeah, hi. Thanks for having me, guys. I was about to type my question.
Kareem, please turn off your audio. Again, if you're just joining, please just mute yourself so you don't distract the conversation.
I think we're just going to be like taking people out once they start doing this. You're just going to go off the call and you're not going to come back, literally.
Let's be gracious.
No, seriously. No, we have been gracious, and let us be aware of how important this is, because again, if you're just joining, it's okay. You're not just knowing how it works, that's fine. But if it's repeating itself, so you can make me speak English. If it's repeating itself, please allow our panelists like speak up so that we can just have them do why they came here and have the conversation that they came here to have, and that would be great. Just join and please be quiet. It automatically puts you on mute. I don't know why you would take it off when you enter anyway, but okay. Thanks. That being
So
said,
we have. I think
yeah, go on.
We can take just 2 more questions because of time, so other people can. So once Lucien is done, we take 1 more question from here, and then I think people can send in. Vanessa, you can just provide an email for people to send their questions to, so that
okay, that's lovely.
All right. So Lucien, please go ahead with your question, and then we'll take 1 more from the chat.
All right, guys. Thanks for having me. I appreciate you. My name is Lucien Elundu. I'm from Cameroon. By the way, I'm so glad I found you guys, because I've been looking for you my whole life. I'm so excited to finally find ambitious African founders. It's amazing. I'm so happy to be here. So I'm the founder of Carbon Plus. It's a sustainable skincare brand handmade in Africa, and it's specifically customized for us, Black and brown skin. So my question is, we are launching in the US with Whole Foods. We partner with UNFI, and we brought on a prominent angel investor. So I'm curious if you invest only to focus on the African market or to go international, because our mission is really to bring, of course, I understand that Africa is the biggest opportunity of the whole century, right? But the whole mission is also to bring the Africanness into the world, right? So I wonder if you invest, by the way, first in CPG brands, and second, to go global. And do you have access to like distribution in Africa and beyond Africa? That's my question. Should I say it again? Should I type it up?
I think that's an aggressive question. I don't think it's.
I think that question is for Ingressive.
So
sure. Vanessa, it's much better you type it, and then Vanessa will take.
Lucien, are you going to be on the call? You're going to be on the call towards the end. So technically, this is a conversation specifically for founders. This is for founders. So we also have conversations for venture capitalists in the company, in the ecosystem. However, if you're on the call till the end, towards the end, that's the 4th panel, and you can ask the same question. However, happy to follow on the conversation with you based off of like, these are the things that we are offering as Ingressive Capital as well. So side by side, but it would come up towards the end of the panel, and then as well, you can also do the filling in the gap. There's still like founders who are talking about their process thus far. So yeah.
My apologies.
Right.
It was
no.
It's fine.
It's
fine.
Okay.
So the last question is from Ido, and this is for both of you, and then we'll just wrap up our session. Why are investors biased? I like this question. Why are investors biased towards non-tech founders building tech products? Interesting. And what advice do you have for non-tech founders building tech products, other than finding a technical co-founder? I'll split that question into two.
Are they biased? Sorry, are they biased towards non-tech founders, or are they biased against?
So I think he's saying they don't like non-technical founders
building tech products. Okay. So I think that's the question.
Yes, I think if I am, as an investor, I am from a technical background, I'm a co-founder, I also angel invest. And I think that if I'm investing in a company where it is a non-technical founder or the founding team, nobody in the founding team, remember, it doesn't have to be only you, right? But if nobody in the founding team has technical experience, the concern usually is that at that very early stage, you might not be able to afford talent to build your product, especially if it is a technical product. And so whether if engineers are doing you 10-10, you can't really tell. You don't even know. There's no way to think around what your product looks like or what whether
that's a very good point, by the way. Like, I have a recent experience, but please go on.
Like when you said that, like they're doing you 10-10.
And it's really messy, but
yes. So at the end of the day, if you are, except you're not building a technical product, but if you're going to be building a technical product, like I said, why you? If you don't have the technical experience, the goal is find a technical co-founder to join the team, because that balances that out. So you are focusing on the business, that person is focusing on the technology, and he's invested in the business to ensure that the technology at that stage is evolving at the right pace. Otherwise, the engineer will leave tomorrow and nobody knows what the code is doing. Exactly. And you don't even know how to hire the right engineer because you don't even know what stack to hire for, what competency to hire for.
And I think it's beyond code too. Someone is asking those people who have been able to build with no code. I think technical expertise is beyond code. It's beyond code as well. Right?
It's also about like building the infrastructure to scale it, building the infrastructure to protect it. Because a lot of people even talk about, oh, I can write code. Can you write secure code? Can you write scalable code? Because it's not just that the code works. Is it secure? Depending on what sector you are in, the security requirement for each of those products, if you're like in fintech, if you're in healthcare, is much more granular and very, very detailed that if anything happens, it can literally collapse the entire business. Any transactional error in calculation in terms of like in your financial infrastructure can mean that you are literally running 2 billion.
I want to say something. Paula is burning to say something.
It's not only in fintech, even in ticketing, if there's one small mistake and someone collects that money too many times.
And they're not doing 10 naira for ticket that is 10,000 naira. You can imagine what that would mean for your business.
Any business has to do with money. It just like one small mistake in the code can just alter everything one day. I wanted to say I'm a non-technical founder. I don't know how to code. I'm a UX designer. So I understand, like I've had like biases from investors wanting to invest, but I have have technical people on the team. So I have that to my advantage. Even though I'm like the CEO and I'm non-technical, I do have that to my advantage. One thing I've learned is that you need to understand how everything works. Even though you can't read code, you have to ask a lot of questions. So I can explain things to non-technical audiences and to technical audiences, and they may think I know what I'm saying, but deep down, I don't really know how it works, but I get the big picture. And if you can communicate that to your investors and the people, your users or your partners, you win, because at least they know that you understand the business and are not just like selling something you don't understand well. I think that would.
Yeah, thank you very much. Thank you so much. I'll wrap up this session with a story that explains why I think it's very important that if you're building a tech product, even if you don't have technical experience, but you need technical people who can, like Fola said, who understand the big picture. So a hospitality company, I'm not going to give a name because it's really bad. I subscribe to their product, and none of the founders is technical, right? But if you're building a tech product, then you at the very least, you need to have a proper understanding of engineering, so that if the code is not working or if the process is not working properly, you know that this thing is not working and this is why it's not working. When I use these people's product once, it doesn't really work, right? I pay almost 10,000 naira. It doesn't really work. But here's the problem. I don't save my card on their platform. But somehow, the next month, I get debited again. Oh, yes. The month after, I get debited again 4 times for the same transaction. This is an engineering problem. If you're building something that has to do with money, and you don't have people on the founding team who understand, like Francis said, the granular details, it's all just going to blow up in your face at some point. So yes, investors are biased for a reason. It's not just for optics. It's for the sake of the process. Right? It's really important that if you're building a tech product, at the very least, even if you may not understand fully how the product works, there has to be a process of quality assurance, right? So that you don't debit people for. I don't understand how you are debiting me 40,000 naira for when my card is not saved on your platform. Anyway, It's been nice having this conversation with you guys. I hope everyone has learned a lot. I've really enjoyed this conversation, and I've learned so much about the fundraising process. I'll let Vanessa come back in, but I want to thank Francis for letting me for joining me, and yeah, thank you guys so much, and enjoy the rest of the event.
Thank you.
All right, Vanessa.
Thank you so much. Thank you so much, guys. I know that we want to really continually have these conversations, but you guys, we're going to have to like reach out to these like people personally if we want to have like other conversations. So Folayemi and Francis and David, if you guys can just put your details in the chat bot so that people can actually like reach out to you if they have other questions to reach out to you about, that would be great. That being said, we have like 4 sessions, so we literally have to be very precise and concise with timing. So we're moving straight into the next conversation, which is talking about non-technical talents and their relevance in like tech companies. And the moderator is no other person than my friend and someone that I really respect and regard in the ecosystem, Blessing Abeng, who is a branding and communication expert and dedicated to helping brands find and identify, communicate their unique identity and better stories. Even that being said, she's also somebody who she I don't know, she does this in her sleep, to be honest, and I'm very happy and excited to have her like moderate this particular like conversation because she's also co-founder of our sister company Ingressive for Good. And so hi Blessing, and this is your floor.
Hi, Vanessa. Oh my God, I feel like such a celebrity. I'm like your intro, Maya, Karamona, all these people. I feel like a celebrity right now. Thank you guys so much for all the love and thank you for that beautiful, wonderful intro. My topic and the topic that I would be facilitating, which I'm super excited about today, is our non-tech roles. Non-technical roles valued in tech companies. And this is fitting because, I mean, I have been a non-technical founder in the company that just got acquired by Flutterwave. And I have also been, you know, I've not been a technical founder, but I have been a non-technical founder and I've been a non-technical employee. And I have done a lot of non-technical things in my life with a lot of tech companies. And so this is a very fitting topic. And I'm super glad that I am surrounded by amazing, amazing panelists who are going to be doing justice to this conversation. One of my panelists was not able to make it today, sadly, but not sadly because she's having the time of her life. But Shala from Metaverse or Meta will not be able to join us today. However, we have amazing, amazing panelists lined up. I have Moyosola Kara of Eze. She's the director of communications at Eze. Oh my God, you look so stunning. Hi, Moyosola.
Hi, Blessing.
I know, right?
Again.
Same. Moyosola is, wow. Moyosola, I read your bio and I was like, oh my God, this is super interesting, right? She is the director of marketing and communications at a YC-backed company called Eze. And she has done this for a while. She's been doing marketing and communications for a while. She has been part of the Nigerian Breweries PLC team. She has worked on things related to 54 Gin. She has been part of so many amazing programs across Africa and across the world. And now she is leading the communications and marketing team at Eze. And that is amazing, amazing. Well done, girl. So happy to have you. Joining me as well is Gatumi Aliyu. Is Gatumi here?
Hey,
yay, hi.
I love the energy here. Loving it.
You know, that's all we know how to do, you know, push the energy. It's contagious. It's amazing.
It is.
And it's all the hype in the chats. Blame it on all the people.
I have it on the side and I'm feeding off of that.
Yeah. So Gatumi, oh my God, 2-time YC founder. That's amazing. That's a big deal. So you are actually the co-founder and chief product officer at Vendees. Please tell me I pronounced that right. It's
Great
such
job.
a big name.
Vendees. Yep. Yep.
Woo! Okay. And he has leveraged technology to improve lives, which has led him to work in supply chain, healthcare, investment banking, technology, consistently thinking about how to build better companies for greater impact. That's amazing. Well done. Looking forward to having this conversation as well. It's nice to have a products person. Finally, the last person joining us is my question. I was going to say my beloved co-founder. Oh, yes, he's here. All right, so he's the co-founder of Ingressive for Good, which is the sister company of Ingressive Capital, which is also where I'm co-founder. It's a nonprofit and we're doing an amazing job. But Sean is an amazing, amazing operations person. He has great leadership experience. And, you know, he's someone you really want to listen to. He's super passionate about Africa and building African tech talent and startups. So, woohoo, Sean, nice to have you.
Woo, it's a pleasure to be here. Gatumi, we got to stop bumping into each other like this, bro. It's good to see you again.
Oh, no, you guys don't stop. Don't stop is a good thing, right?
Yeah, no. I know Sean and I go way back. We met a few weeks ago. Good to see you.
Have to be on purpose next time. Pleasure to be here. Pleasure to be here. I'm glad. I'm excited. This is one of my favorite topics. So we're going to get spicy today. So.
All right. So this is such a balanced panel. And we already got our time eaten out, like 6 minutes, thanks to David. So we're going to have to try and keep it a little shorter and, you know, make sure the conversation is interesting. You guys have wealth of experience. And I'm so glad we have comms, we have comms/marketing, we have product, and we have operations. Totally balanced team, right? Looking forward to this conversation. So this conversation, you know, when you think about tech jobs, when you think about jobs in general in the tech ecosystem, and you put out job notice and say we're creating jobs for people in tech, most people's minds just go straight to technical roles. And it's like, oh, I don't know how to code. Oh, I don't know how to do data stuff. I'm not a developer. What role do I play here? But surprisingly, 43% of the jobs advertised by companies, tech companies, are actually non-technical roles, meaning non-technical roles require, technical companies require non-technical people to actually build the company to a great, successful extent. So let's talk about that, right? And I will start with you, Sean. What do you think, how important do you think are non-technical roles in companies, especially in tech companies?
I think they're quite important. What you find is that tech people tend to focus on tech things, and they're typically in tech environments, right? So you're looking at a person who spends a lot of time in front of a computer and different things like that. Not to say that it's not important, it's not complicated, it's not necessary, but then you have to juxtapose that to where when it comes to doing things like building company culture, building company interactions, how things flow from place to place and how people engage with each other, that's where you have to have some of those people skills that might not necessarily be something that is so important as a technical founder. You know, when you start getting into this space, when you start looking at especially the operations space, if you have a technical founder, they might not be paying attention so much into getting into the nitty gritty of how the company works once that idea is there, once that product is built. How do we push it into the streets? How do we get it in front of people's places? These are very much so functions of people who are interacting and engaging with people. If you're looking at the legal support, the copyrights, trademarks, different things like that, accounting, who's keeping the books, all these different things, marketing, do you know the competitors, and different stuff like that, where I find it's best to let tech people focus on the tech things, and they need to build around them that ecosystem that's going to make them and the product great.
Oh, thank you so much for that. Speaking about, you know, tech people focusing on the tech things, I'm curious about what you think, Moyosola, about tech people actually focusing on the tech things. Do you really think that tech people should focus on the tech things and leave non-tech people to focus on the non-tech things, or do you have a differing opinion?
Okay. I mean, when you say tech people focusing on non-tech things, do you mean tech founders?
I mean, like tech employers in the company, I mean, and tech employees in the company as well, because like they're going to be engineers, they're going to be devs, they're going to be data guys, right? And they're also going to be marketers, and they're going to be product people and operations. So should tech people really focus on the tech things, and should non-tech people really focus on the non-tech things?
I think for it to really work, you know, you need to look at it holistically. Just like Sean said, everything kind of feeds into the whole, the big goal, right? So you have scenarios where somebody like Atumi, who's a chief product officer, is working directly with the tech department to make sure that whatever is being built, because they're just thinking data, they're thinking coding, they're thinking engineering. He's thinking, okay, but how does this translate to the people that we're building this for? So I don't think that anything can really exist in isolation. I think that it's all interwoven. And so it's just about both parties really respecting the fact that, you know, I know what I know, and, you know, let's all work together to achieve the common goal. So I don't think that anything can really exist in isolation. I think it has to all feed into each other for your startup to be successful.
That's an amazing perspective. And that leads me to Gatsumi, because I'm thinking, first, I already said that 43% of the jobs that exist in, that have been put out lately have been for non-tech roles, right? However, 54% of the jobs in tech companies are non-tech roles as well. So when we say like, are non-tech employees or founders really undervalued? I'm curious to hear your opinion, because you're a non-tech founder in many ways. So do you feel undervalued, or have you experienced some sort of different type of treatment when you pitch as a non-tech founder?
Okay, so I'll say this, right? First thing I'll say is we like to think of ourselves as building a company, not a startup. And building a company, there's so many different aspects of this company, and all of them need to be built, and oftentimes at the same pace, or else you're building sort of a niche instead of a company. So that's the first thing. The second thing I'll say is, so because in my experience, right, I've built a biotech company and I'm building a supply chain company. We think of it as a tech-enabled company. So we think of going into a traditional company and, you know, sort of digitizing or changing that. So you must understand the core business, what they do, why it doesn't work, and then use technology to scale that. So you must have very core business and really understand business as a whole in order to do that. And that's why my role in products is really important, I think. And to talk about what you said, things like growth, supply chain, logistics, these are core parts of my company, Bendy's, and these aren't tech roles. These are roles that obviously we have a huge business intelligence team, a huge data team, and a huge tech team, but people have to run these businesses. So we value them just as much as we value our tech people. However, tech is such a global role, right? That you sort of have to pay attention to them, because literally you have an engineer, in 2 days, he's making 20x what you can offer, right? So there's obviously, you have to build around that and recognize that that's special. However, there's people, like I said, supply chain growth, all these other parts of the core business that are also equally important.
That's amazing. Thank you so much for that insight, actually. Because when I think about it, so working as one of the non-tech founders, where there were like key tech founders and key tech people as well, you can see how important tech is to the business. You can see how important, hi, Brittany. Could you turn off? Thank you. So you can see how important tech is to the business. You could see the impact of tech, but you can also see how important non-tech parts are, because like before I was brought on board, it was about, we have built this amazing company, we have built this amazing product, but we're not growing. We're not reaching the people we're trying to reach. What is missing? What are we not saying right? And talking about that, I'm here thinking, what are some stumbling blocks you've encountered? I don't want to say you think people encountered. I would like your personal experience. Moyosola, I would really like to hear what are personal experiences that you've encountered as a non-tech candidate, stumbling blocks per se, you know, in your career, and how did you navigate them so we can actually learn?
Okay, so I think the very first one would be imposter syndrome, especially moving from non-tech to like a tech, you know, a tech startup. The culture is different, you know, the speak is different. You know, even just the fact that even as a director or as a VP or even as the CEO, you're still required to grind. Like, you're still required to roll up your sleeves and do the work. So, and you know, you're not really bound by timelines. So for example, for me, I'm currently working for, my bosses are in LA, meaning that there is a 6-hour difference. So sometimes my meetings run into like 10 p.m., 11 p.m. I've had to host a session at 3 a.m. before, right? So, you know, just really, I guess, getting into the swing of things and really understanding that at the end of the day, like the basis of marketing and communications is still the same, right? You want to understand how you can tailor whatever your product is or your service is to the audience. And so just understanding that the basis is what it is. I know what I am doing, regardless of what product I'm trying to push or what service I'm trying to push. At the end of the day, like Gatsumi said, a tech startup is really just a tech-enabled company, right? So I guess like really understanding that and immersing myself into the product or the service and really understanding who we're trying to speak to, I think over time that helped me deal with my imposter syndrome. I think it was particularly more difficult for me because I was also getting into a space that was very niche. You know, at the time I was with 54 Gene and it was a genomic startup. There was no blueprint for what we were doing. It wasn't like I had another competitor to look at to say, oh, okay, how do they structure their messaging? I was really building from scratch, even down to creating or building a team. And so I think, you know, that was my first stumbling block. And then the second one would be what I've already spoken around around culture, you know, operating a flat system. You're not calling anybody sir or ma. Everybody is just trying to get their work done, you know, and there's no, you know, kiss ass or sucking up. It's just really everybody just trying to put their head down and get their work done. I think those are the two, and I think those are the things that I've also seen even in trying to recruit people for my team, where, you know, especially with women specifically, they come in really unsure, really uncertain. You know, you have like a female and a male candidate. Many times the female candidate is more qualified, but they're asking for half of what the male candidate is asking for in terms of just their, you know, what they want to get, what their monthly compensation would be. So I think, yeah, that those were my two stumbling blocks. I don't think that it ever goes away. I think that the more you move around or the more you grow, the more you get promoted and you're in, like, you know, you have bigger shoes to fill. It definitely doesn't get any easier, but I think that you just have to keep reminding yourself that you know the work, and you are in this role because, you know, somebody believed that you could do the work. Yeah. So it's just really about constantly learning, constantly applying yourself, constantly immersing yourself as well in whatever field you're in. I mean, I was reading genomics journals and genomics articles. I don't have a health background. You know, I don't have a degree in medical sciences or anything like that, but I was really like having conversations, having virtual chats with, you know, people within the space in the US, for goodness sake, you know, because it didn't exist here. So I think it's just the only way to combat that is just continue learning, continue growing, look beyond, you know, your nose and see what other people, even outside of the continent, are doing and see how that can apply to the very specific and unique audience that is within the African continent and more specifically Nigeria.
That's such an interesting perspective. And what is even more interesting about that is I used to mentally think, oh, communications, right? We have to always take the personality of the brand that we're working on, have to take on their aura and, you know, embody it like you're the one. I mean, you're the one, but you're the human being actually. And I know that for communications, but I also now see, as you were speaking, that this could also apply to product and could apply to other non-tech roles where you need to go do your research. You don't have to know the XYZ when you're coming in, but as soon as you're in there, you need to immerse yourself in understanding what is this about. You no longer have the excuse of, oh, I am not a coder, so I don't know how this works. Ask questions, you know, that's so important. And I feel like Polayem even spoke about the power of asking questions as a non-tech person when you're working within a tech space, but I will let someone else talk about that. No, Sean, you're the king of asking questions, so totally hit me. How has asking questions helped your career, especially with working with tech people? I know you worked with yeah, lots of tech people. So talk to me. Sean, you're mute, so we can't hear you.
Yes, I'm really glad. You definitely, Moyosola, touched on a large part of what I wanted to bring up. So the part of asking questions is you have to realize, like, especially if you're a non-tech person in a tech company, you have to realize technology moves so fast. It is not something that you can just sit there and think that I need to know enough to be dangerous. You kind of have to deep dive in, especially if these are things that are core to what your company is doing. For example, like the perfect thing I love to use, since you've already gave the context, the perfect example for me was blockchain and cryptocurrency. I remember literally a year and a half, 2 years ago, like, blockchain is just something people are using to get attention. It's just that flashy thing. There's not really a use case, whatever. So, I look at it and, people are doing whatever they're doing with it. And then you fast forward 18 months and now cryptocurrency has transitioned into crypto VCs. You have NFTs, you have DeFi, decentralized finance, decentralized automated organizations. You have like all of these different things going on where that one little small part that you missed has now evolved and morphed into something completely different. Now, if you're at the helm of a company as a non-tech founder, and these things are going around in your ecosystem and you're not staying on top of it and staying aware of it, you get left behind, you get disrupted, you get blindsided. So I think in that space, to take it back to the questions part, asking the right questions actually is what I found is a major tool I use to even know where to go to find more information. I ask the right questions. I start taking out these buzzwords. I write down the things that I don't understand when they start talking like they're saying a different language. I try to record things in conversations to try to figure out what is this thing? Where do these things connect and how is it relevant to me? So I'll just leave it there because again, you provided great context.
Well, guys, I don't know, we're not listing like number 1, number 2, do this thing, number 3, but there are so many gems being spread and shared. And I hope you're paying attention to the Vanessa stuff. But there's so many gems being shared and I hope you're actually picking them. Moving on, but wait, before I move on, I noticed that Ingressive Capital also does this thing on calls where they say ecosystem news. And if you're a tech co-founder on this call or you're a tech founder, it's something you can incorporate to sort of help your non-tech founders your non-tech employees sort of catch up with what's going on in the ecosystem. So it's called like the ecosystem news. And you could just ask your audience and your employees every single day of the week to at least tell you something new that is going on in the tech ecosystem. And that way they're forced to know what's going on, even if they don't want to, right? So just free tip you could just take from Ingressive Capital's playbook. Yeah, so we're moving on.
I just want to add one thing to what everybody said already.
Yes, please do.
I think about it as, have research as your superpower. If you're not a tech person, right? Literally be the guy or the girl where like anything that's cutting edge, anything that people want to do the bare minimum. Like Sean said, go deep down, like understand it. That is itself, like actually grind. Like, I want to know this. I really want to know this. Be that person. It's not hard to do. It just takes, time. And like that simple thing will, like Sean said, like you can become a product leader. You can become marketing and comms person. All these other roles it's not special. Like just be willing to do the work. And I think you get a lot of value from that.
I think you speaking about the go-to person.
So can I say something, Blessings? And just maybe because this is very sorry, I know this is you. And maybe because this is like a pain point on the other side. I think that it's also important to note that it works vice versa. So tech can learn about non-tech can learn about tech. So it's a nice cross-pollination process that needs to also happen. So when you talked about like ecosystem use, that is amazing. One of the things we do, but we also have to remember that it's not only ecosystem use that also happens in the system, we also have other parts that exist. There's people and culture. There is like, communication and like, marketing. There is like people and like navigating like different, there are multiple different facets to it. Just saying like there's a cross-pollination that always needs to happen. And that is one of the things that I think we forget to happen and navigate and align because everyone keeps saying the same thing, which is, oh no, it's just because we're a tech company. But I'm just gonna let Blessing continue. I just wanted to highlight that.
I was just about to add you as one of my panelists. So maybe after like a couple of questions, I'm going to ask you one question. So it will be balanced. But yeah, I really like the cross-pollination thing. And I think what is even interesting when you see some of the calls that Ingressive Capital has around this ecosystem news, you would notice that depending on the roles, people have different things that pique their interest. So while some people are talking about this new thing happened in engineering, you find marketing people talking about, oh, wow, did you see the Spotify Wired thing that happened? And it brings a new, different direction. It's like we're all looking at the same thing, but we're all saying different things, right? Which is really how companies run. And so I like that you brought that up. Thank you so much for, inserting that. It was a worthy insert. So thank you. I was going to ask you, Gatumi, really quickly, because you were talking about how you can be the go-to research person. And I was, as a follow-on to that, is like, what is the role of thought leadership in establishing you as someone that we can rely on, as someone who actually knows what they're doing and who actually understands what's going on? How do you build thought leadership as a non-tech person, co-founder, or employee?
Okay, this is a really interesting question, right? So one of my co-founders is Tunde Kara, Moya's husband. And I remember when we started Then Used, I'm a product person, and I try to lean towards being like, products and almost technical. I used to absolutely hate PR, comms, Moya knows this, anything of that nature. I was like, look, my thought process is people that talk too much don't really build anything of substance. Obviously, I'm here to say that I was wrong. Absolutely wrong. So in talking about that, the first thing is you definitely need comms and PR, right? Remove the research and just building your own company. You have amassed all this knowledge across a plethora of things. I'm a founder, so I look at everything. And it is so important to, first of all, rely on marketing and comms and position yourself as that, right? And you position yourself as that for a variety of reasons, but one of them is investment. Every time you're trying to get investment, you are essentially convincing somebody that you know enough about this and you're a lifelong learner for them to give you more money. Simple as that, so that their money can increase. So the moment you do not come up as you know what you were doing, think about that. Will you give yourself or that person any money? Exactly. Right? So that's the first thing. And the second thing is, a lot of times as well, you are also at the forefront of your industry, at least you should be. So you're also convincing people, users, investors, everybody that this is where this could, you're sort of pushing the boundary of that, right? So people are used to GT banks, and in fact, you're saying, okay, here, there's CUDA. People are used to going to the market. You're saying, hey, there's Vendis. People are used to, so you absolutely have to put yourself, you have to come off, you have to be, and then, okay, let me say this. You have to first come off because you have to fake it, and then you have to be a thought leader. And I say that for everybody here because sometimes you transition into businesses that you don't know everything about. And that's okay. Like I said, your superpower is research. In 6 months, in 3 months, you can become a thought leader. It's not, sometimes you look from the side like, oh my God, this person it just knows all these things. No one just knows all these things. People put in the work and then they get to know these things.
Thank you so much for ending on that note, because transitioning, like thought leadership, how I always view it is like you're a thought leader for the particular place that you are right now. And so don't try to pretend you know more than you currently know. Just like share your experience where you are, how you are with what you have right now, because there are people who are currently in that current position and they're going to benefit from your insights, right? And so if you share that right now, where you are, they can also see you grow. And people like growth stories. People want to be able to say, oh, I knew Emanuela when Emanuela was just starting her comedy life, when they had 1,000 followers, and now she is YouTube's ambassador or Wikipedia's ambassador. People like that kind of story. And so it's important for you to be able to like share what you know, but also highlight the things that you don't know that you're learning and how you show that you're implementing those things. It just really, really helps in building thought leadership, and the role of authenticity really comes out and just endears people even to you, right? And so that's an important thing. So thank you so much for sharing that. I'm curious, Gatumi, just last question to you, by the way. Vendi is like vendor ease. Is that how you came up with that name?
That is exactly how we came up with that.
I'm a comms person. I have to know this.
There you go. I'll give you a nice high five. I'll give you a virtual one.
I take it. I'll take that one. Curious, very curious, Moyosola. I don't know. I wouldn't ask you another personal question, but I'm really curious about, in terms of updating your skills, what are key things you need to do to update your skills as a non-tech person? And I'm going to ask you the same question, Sean, so prepare yourself, because I mean, you're co-founder of Ingressive for Good and you are all about upskilling. So Moyosola, please, could you go first?
I think that one of the beauties of digital and just everything being on the internet is that there is just so much information at our disposal. I think, it can come in many forms. There's Medium articles that are easily digestible, that put a book in like bite-sized information that you can constantly read. So I have a rule. Every day I try to read something new around my field and specifically in other markets. And that really happened because I got into a role where it wasn't Africa focused anymore. I mean, I'm running marketing and communications in Mexico, Nigeria, Russia, Ukraine, and the US. And these are very different markets. They have very different speak. Their buyer personas are so different and diverse. So I think, just really looking at what other people are doing, immersing yourself in like articles that are available online. I actually put in the chat that I subscribe to the University of YouTube. I stan YouTube. There's all these, there's so many people constantly doing, like, there's even CMOs now who have YouTube platforms or channels where they're talking about days in their lives, and they're talking through, this is how I get some of these things done. And there's just all these different things that you can learn. I'm not a big education person. I'm not that person who's going to tell you need to get an MBA. And that's a whole other conversation. But but I think, all the information is just really out there. And I think it's just really understanding, for where I am right now, what is it that I need to learn? What are some of the things that are important to me for where I'm at? And then really just getting into, like, there's all these, short courses online on Udemy, on edX, that you can also just take whilst you're working. It's all available, and it's just really, I think, understanding and being able to chart your career trajectory and say, okay, I'm currently here. What is my next step, or what is the next chapter I want to get into, or even within my company, what are some of the things that I want to learn? So for me, for example, at Easy, sometimes I work very closely with the tech team. So I had to take UI UX writing courses, because writing short form and writing long form, two completely different things. Writing for social media, writing for websites, completely different, right? So I needed to really get into the mind of, okay, so I'm writing for a website, or I'm writing for an app that we're building. How is this person going to digest the information that I'm putting out? And so I just really immersed myself in articles that talked about that. There's a platform called Lunch Club, which I subscribe to. And it basically just pairs you with like different people in different parts of the world. And you're able to do virtual coffee with them. And I had virtual coffee with this, really delightful lady. She was based, I think it was in Costa Rica, and she's a UI UX writer, like that's her job role. And, we're able to chat through some of the things that I was learning. And I was telling her, like, okay, these are some of the things that I've learned, and I want to get better at this. And she was able to share with me, like, some of the things that she has implemented that has made her career or her journey a lot easier. And so it's just really about connecting. Also, don't be afraid to use LinkedIn. I'm always on LinkedIn, you know, reaching out to one person or the other, just saying, hey, I really love what you do. Can we have a virtual coffee? Let's chat, you know. And now with COVID, one of the beautiful things about the pandemic is that it's also made things a lot easier. You don't have to go and actually meet up with somebody, you know, and it's safer. You can literally just be like, hey, can I send you my Calendly link and let's just have a 30 minutes chat. So yeah, everything is really at your disposal, and it's just right there. It's just really about figuring out, okay, what is it that I want to learn right now? Or what are some of the things that I think I could be better at? How do I continue to hone my strengths? How do I, you know, make sure that my weaknesses are less emphasized? And how do I learn some of the things that I don't know? I feel like it's a lifelong process. The learning doesn't stop, to be honest.
I really love the idea of the virtual coffee thing. I'm stealing that. But when on your virtual coffee hangouts, do you drink coffee and the person drinks coffee too? That they just being sure, right? So I do it right.
I'm a recovering coffee addict, so I'm I'm only allowed a cup a day. So sometimes I don't necessarily have to drink coffee. Sometimes it's just just have a bottle of water. Gatsumi knows. You want over coffee addiction. But yeah, you don't necessarily have
That's great discipline. Good one. Oh yeah, I was going to. Wow, Sean. Wow. You're in a safe space. Apparently, Moyotola, you're in a very safe space. I'm curious about how you counterbalance that vis-a-vis misinformation, because you're literally throwing yourself open to information, right? But how do you guarantee that this person who is informing you is good enough to really know what they're saying? Because as we know, the internet, sometimes people just have partial knowledge and they share it. And so people don't really know what they're talking about. So how do you balance that?
Oh, absolutely. So one beautiful thing about Lunch Club is they don't just admit just anyone. So they do like their own like checks before they have people on the platform. So it's not just like, you can't just join Lunch Club. They'll have to, I think you have to do an application, and then they, you know, so they do all the filtering. And another thing that I really try to do as well is, before I'm reaching out to somebody and saying, hey, let's do virtual coffee, I would have read all there is to know about this person. Like, where do they work? You know, what is on LinkedIn, you can actually see when people have left your recommendation or a referral. I read through that because I've actually had situations where, you know, I've been stalked on LinkedIn, sadly, you know, and this guy was really hounding me, and I went and, you know, asked a couple of people that I saw we had mutually in common, and I said, hey, do you know this person? And a lot of them didn't, and that was just it. I just blocked him. So really just doing your own research and saying, hey, and also I'm very, very like granular about my learning. So if I want to learn, say, for example, about UI UX writing, I'm going to a UI UX specialist who has worked with, you know, companies that have websites and are verifiable, you know, and, you know, I'm just doing my own research and not necessarily just jumping the gun and just throwing it out there and saying, hey, let's meet. Also because I don't have that time. So I'm very guarded with how I choose to spend my time, because there's just only so many hours in a day. So just do your research and make sure that you're getting information from a verified source.
Thank you. I mean, thank you so much for that insight. Sean, so the question I was asking is, what is the role of upskilling for non-tech people, right? How can non-tech people leverage upskilling to improve themselves? And I know I'm asking you this because Ingressive for Good is all about upskilling, especially to help increase the earning power of African youth. And OM in the chat said that non-technical people earn way more. Yeah, so could you help us? How can non-technical
people? He said tend to, they can, you know, like, it's not that it's like, it's not like finite. It's like they can, they really can, honestly.
They can. So how can they, by upskilling themselves?
Yeah, I mean, every tech founder, every founder is not Elon Musk, right? The guy that seems to know every single thing and whatnot, and knows how to have a collective knowledge of all these different spaces simultaneously. But I think, like, to me, when it comes to upskilling, I think that's kind of like the example of how we should approach things, or what we should aspire to. So you have a person that's in one space, focusing on digging holes underground. He's doing spaceships, he's doing electric cars, he's doing all these different things. And I think there's an understanding that there are certain technologies, there are certain spaces where they're connected. And I think once you start doing research and start upskilling, you kind of open up your mind and open up yourself to understanding what are different spaces you can pivot to. You start understanding how useful are your skill sets. You start understanding different ways and different use cases and different possibilities to how you can apply yourself to certain situations. So I think for us, the most important reason, or for me, the most valuable thing that I would dedicate or push behind the upskilling part, again, is just opening up yourself to more opportunities. Because again, you can look at, for example, if you look at, well, I don't want to get too spicy, but let's say there's Twitter, there's cryptocurrency, where things were one way, one day, and then the other day you had to kind of like figure out how are you going to rebuild your life, right? So like, it's these moments where you start looking back at and start valuing all these different skills that you've built out along the way. And I would say for a lot of people, you can't kind of just breeze through life. I always say, for me, it's kind of like recording, have a diary, be paying attention to kind of what you're experiencing and what you're going through, and commit that to somewhere where you can kind of go back. Because there's the upskilling for these external skills, but keep in mind, you also have to upskill internally. There's all of these different things when you're paying attention to, again, coding, developing, data, science, all these different things. But again, you have to create an environment internally where these things can take root, or where you can clear your mind to understand how these pieces fit together and how you can transition into different spaces. I would say one of the major reasons, or one of the things that I would say is, like, to a hammer, everything looks like a nail, right? So you want to kind of upskill outside of that. So again, you can see the world in a different context. So I'll leave it there before I go into
and I like how you related this to soft skills in many ways, and which is why I like how Ingressive for Good trains, where we do both hard skills and soft skills, because people are people, and you're going to be working with people and not necessarily just laptops and AI and bots, and so that's interesting for me. But I like what you said about opportunities as well, because you need to leverage opportunities. I'm taking this moment to also say that, guys, please, if you have questions, you can start typing them in the chat box so we can take them. And you could direct your question to a particular speaker. But yeah, opportunities are important. And now more than ever, because of the internet, there's so many opportunities. Even just with Ingressive for Good, it's like they always have opportunities. It's crazy. I remember when we had like the Coursera thing and people were learning so much. There was a guy who had to transition from just marketing into product marketing by just taking a Coursera course from a Stanford or like a really highbrow university globally. So don't limit yourself. Don't make excuses. Don't sit down and cry and just be like, oh, nothing is working for me. Stand up, get up, do something, look out for opportunities, right? And I think books also help. I like to read books based on the situation that I'm currently in. So if I'm facing a current challenge right now, I'm going to look for a book that's going to help me with that current challenge, because at that point it's more relevant and I'm more likely to implement what I have read, as opposed to just reading a book randomly just because it looks nice, right? So if I'm trying to figure out growth of a product, I would read a book about growth and try to implement the strategies that I have learned. So if you are not into books, you could try audiobooks as well. You could do Blinkist, you could do like short forms, you could be like Moyosola and read articles and at least one thing a day that's going to upskill and upgrade your life. So this was such a great conversation. And I just want to
add one thing to what you're saying.
Perfect, go ahead.
Get a mentor. Get a mentor.
You know what's weird? I was about to ask you a question about mentorship.
Oh, for real? Okay. So I am sorry for jumping the gun. The excitement has gotten to me. So I will backtrack. Please go ahead, Leslie. Do we? Hi, Blessing. Can you hear me?
She might have frozen up. So maybe you do drop your. Oh wait, she's back. Okay.
Oh my God, guys. Wow, I was typing on top. Move. I'm back, guys.
Welcome back.
Thank you. I was just about to ask you a question about mentorship, but I'm glad that there are differing opinions, right? So I'll just ask it, throw it out there, even if Vanessa is going to have my head, because we're way above time. And please, guys, start asking your questions so that Vanessa doesn't kill me. But yeah, like, what are your thoughts about mentorship? How do you find the right mentor, and how do you leverage mentorship to actually, you know, be in front of the people that need to see you, or to actually upskill and grow in a way that makes sense? And Moyo, so I'm guessing that your opinion might be towards, you don't really need a mentor, you know, you could just look at people from afar and learn from them. So I'm curious about that. And, you know, these two different types of mentorships, because they're both mentorships. And, you know, share your thoughts, tell us.
Okay, so I will try to be very brief. So the single biggest influence in my tech career has been mentorship. My background, I went to medical school, and then that's why 54 Gene happened. But in that transition, when I moved back to Nigeria, and I was trying to figure out what to do, one of my mentors is a friend of mine, E of Future Africa, Flutterwave Mandela. I had a conversation with him, and he was telling me, this was pre-Flutterwave, and he was telling me how he was going to build this thing that was going to transform payments. We were at Radisson Blu. And I remember thinking, are you crazy? Like, dude, like, get a job. Like, you know, people leave school and they work for companies. And just him telling me that story, I went home and I was like, wait, I don't have to like go and work for a company. I can just start something. Blew my mind. Obviously, now I'm saying this in a very macro, right? But that was the beginning. That was the seed that started everything. And after that conversation, it was very difficult for me to go to any company and work. All I thought of was, okay, I see all these problems. And I think that if Ian could literally start Flutterwave at that time, and this is obviously post what he'd done before Flora, why can't I literally do the same thing? And obviously along that journey, you know, I would tell him, hey, I'm thinking about this, you know, I'll go back to him. But here's the thing about mentorship. Your mentor is not your everyday sounding board. Your brainstorming partner. They are not that person. They are very, very time constrained people who you want to use when you're at an inflection point. Come to them with value. Something, when I say value, I mean value, mental value, like intellectual value, something that they would actually spend time thinking about. Anything that you don't absolutely need them for, go to YouTube. There's somebody else that's answer that question. But yes, mentorship. And now I have mentors in I have different types of mentors. I have people that have built huge companies, multi-billion-dollar, older people that I look up to. I have mentors that are like in Series C, like at every point. I have mentors in relationships, mentors in soccer, all sorts of mentors, because the way I see it is, if somebody has done it before, and I'm a talking person, I like to talk to you. Like Moyo, I'd rather not read a book if I can talk to you. So I have mentors in all these different things, and I use them extensively.
Thank you, Moyo. What's your differing opinion? I'm so interested.
So I think I mean, a lot of what Gatsumi said is actually valid. I think my issue with mentorship is really the strictest form of mentorship. I think especially in this climate, when we say mentorship, people think this is your godfather or your godmother. And there's also an expectation on those people to be that. So it puts like pressure on both parties that doesn't need to be there. So I'll use myself as an example. I don't have mentors. I have what I call my personal board of directors, and they know themselves, right? And these are people that I go to for different things, right? One of them actually was on the call that just ended. Francis, he's my investment guy. If anything to do with money, you know, Francis is an Igbo guy to the core. He knows how to invest. He knows, like, you know, what stocks are booming, what is going on in crypto. And so he's the person that I would go to on matters pertaining to that. I have somebody else who I would rely on. So she's actually based in the US. She's a chief commercial officer at a really huge company. And with her, I go to her when I feel like maybe the next chapter I'm envisioning for myself may be a little too small, because her world is so much bigger than mine. So I'm thinking, oh, I'm a director now and I want to be a VP. And she's just like, why do you want to do that? Like, there's this role that's, just opening up, and this is a role that's just come up this year. And why don't you, I think you're better suited to doing this. And she just really helps me see things from a different perspective. And there's other people on that. I have about 5 personal board of directors that I go to for different things. And as well, and I think it's really important to emphasize on this, it's also important that you're also driving with them as well. I think that there's an entitlement thing, especially in this climate, that is really bad, where, I've had situations where people have come to me and said, oh, please, I want you to be my mentor. And then there's just always like, oh, I want to take. And it's just like, okay, pause. I'm not existing just for you, and so that's my thing with mentorship. So when somebody's saying, oh, I want you to be my mentor, I always feel like I don't know, there's a burden that comes with that, as opposed to just saying, hey, these are people that are great sounding boards for different things that I want to achieve. And also being able to reach out to these people and say, hey, do you need assistance with anything? Is there any value that I can, create for you? Is there anything that I can do for you? It's a tit for tat relationship. It's not just, it's not just linear. Yeah.
Thank you so much for that perspective. It's always a two-way street, like Gatumi just said. You're so right. Every mentor that I have known, well, I've never really had mentors, just like you. I like that we call them different names, but eventually I feel like at the end of the day, we're back to mentorship of some sort, right? And I know that there are people who are even called sponsors, people who they put word out there for you, people who would hear about opportunities and call your name just because they know you. There are people like that, and just identifying those people in your life, it can go a long way for you. So, but like that thing you said about being of value, I've noticed every time I go to someone that I really, really reference or respect, I'm just like, oh, I researched this thing probably about you and I noticed you need blah, 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 blah. How can I be of help? And if I don't know what I can do, it's like, what do you currently need right now? Even if I don't have it, is there somebody that I know that can connect you with? That just makes them feel like, oh my God, because everybody else is trying to take something. They're either trying to take pictures or take followers or take some, there's always something people want, and so that's really important. But the other thing that I would like to talk about is that mental thing that you mentioned. So I recently just read about it, and it's called like a mental ceiling, right? Where you mentally just, when you think about something, this guy characterized it by saying, think about the money that you want to earn, multiply by 2 again, and keep multiplying it by 2 until you start getting uncomfortable. What amount made you uncomfortable? And then you mentally begin to realize that there is an amount you have unconsciously said, I can't earn more than this. There is no way in the world people can pay me more than this. And that doesn't just reflect in money, it reflects in other areas of your lives. It's like, if somebody told you could raise $10 billion, you don't believe it sometimes, because it's like 10 billion. It's like, are you sure this is like 30 billion gang? Is it me? And those things are mental ceilings we've created in our head. But by exposing yourself to people who your mental ceiling is actually their flaw, you then realize, oh my God, look at how much Twitter is earning. Look how much Twitter is moving and controlling. So I too can. The people who are doing it, they don't have 2 heads, right? And so they help you dream bigger, dream better. And so surrounding yourself with people who are better than you does a lot for you. So if you find those people, please hug them and leverage them. There's just one more question we need to take, and that's from Ehimien. I hope I pronounced your name right. How do you know, and this is directed specifically to Gatumi, how do you know an idea would gain traction? What metrics and parameters do you need to know if you needed to get funding?
Hey man, so this question is very tricky, right? Because a lot of people talk about it. So I'm gonna try and answer this in a little story. So this is the way we started Bentley's. So one of my co-founders, Olumide, and his wife started supplying food and supplies to a hotel. And they would turn this around, and after about 2 weeks, they made 30% profit. And so obviously you need money to buy more supplies. So that he came to me on Tunde and was like, hey, this thing exists. Let's, give me more, let's put in more money. Let's all make 30%. So number one thing, make money with your friends. And obviously after doing this about 2 or 3 times, all of us are just like, wait, hold on here. If this one hotel, we started doing for another hotel, if these 2 people need these supplies so badly and are willing to pay 30%, we just made a bet that, okay, more people will need the same thing, and we could probably reduce that, the profit on that and extend it. Obviously, in order to build something that many people can use, you need technology to scale. And so that's literally how Bendy started. Now we're in 3 cities, going outside the country. We have almost 1,000 businesses on our platform, and all of them are, using us to transact. But the answer to that question is, the way I look at it is, you need to find a real problem that, not something that is cool or something that people are willing to pay money for. Find a problem that, no matter how shitty your solution is, literally if your solution is an Excel sheet, which it was for us, people are willing to pay for that because it's so bad, you're likely going to find a solution that can gain traction.
Perfect. Thank you so much, guys. So in the absence of questions, I'm just going to take one quick round. Vanessa is killing me with her eyes, but we're just going to take one quick round, just like everybody's going to tell us one thing you would advise anyone who is, different types, right? So as a non-tech founder, what's one thing you would advise non-tech founders looking to break into, the tech space? What's one advice you have for them? Moyosola, you're going to tell us one advice for people who are looking to grow in their non-tech careers. And Sean, you're going to tell us one advice for anyone looking to break into their non-tech careers. Is everybody clear? It's like you're for co-founders, you're for breaking into, and Moyosola, you're for people who are already in but want to, step it up. Let's go like this. Katumi, you first.
Okay, find a technical co-founder. You will not go very far without somebody who's a founder who can also write the code. You need somebody invested in you, in the business. You obviously can't pay the person, somebody you trust, somebody who can write code, a technical co-founder.
Yeah, and investors will trust you more when they're investing in you. Okay, Sean, your turn. Keep it brief, Vanessa's eyes.
The first thing is, I would say, join a community of like-minded people when you're trying to break in. Find where people are who are doing that thing, where they aggregate, where they socialize, where they do their thing. Join that. That's why for Ingressive for Good, we were hell-bent on making sure that that community was very sticky.
Thank you. Moyosola, your turn.
Okay, so for people looking to grow, I think the one advice that I would give is keep your ears to the ground. And not just locally, globally. See what attains outside of the country you're in. I think there's something that's happening right now, which is lots of Nigerian talent actually working for companies overseas, and I mean I'm one of them. So the opportunities are endless, they're limitless, and it's just really about just learning what attains outside of the little bubble you're in, and making sure that you continue to keep learning.
Thank you guys. You guys were so amazing and you kept that under 1 minute. I'm so proud of you. I want you guys to know that we broke a record. We maintained 137 participants consistently. Like, we're cool, guys. We're cool. So if you're still one of our 137 participants, please take a screenshot of us. Right now, we're going to post for you and share on social media and let people know what's happening. Share with one thing you've learned from this particular panel session, and feel free to tag the speakers, because then we will notice you and it could be a great way to strike a conversation, right? So we're about to pose. Everybody, let's pose. 1, 2, 3, go. Woo! Thank you so much. Vanessa, over to you.
Vanessa, you're amazing. Oh my God.
I know,
Just
right?
amazing.
The energy. Oh my God. Be inviting me for these things.
Okay, you guys, Gatumi, Sean, Moyo, bless you, bless your heart. You guys, please put your details in the comment section and let everyone see section. Let everyone see your details if they want to reach out to you moving forward. You guys, we have like a bunch of other sessions to go to, but before we do that, we also have like other like conversations to have. Part of the reasons we're able to get to this point is because we also have panelists as well as partners who are amazing and have helped us get to this point, and we really like we're excited to have them on board. One of them is founder of Africa Rising Women in Innovation. Her name is Jeanette Udo. And Jeanette, where are you, please, my dear? Because
right here.
You're right here. Okay. So Jeanette is founder of Africa Rising Women in Innovation, and she has been championing the cause of African and New African women in innovation and founded the response to gender and diversity gap in innovation. You guys, if there's anything we know fully well, is part of the results we've seen in this year is like when it comes to investments in Africa, women are significantly behind. And not to like say much, but like just 1% of like, you know, the investment that's coming to Africa is just going to female founders or female founding businesses, and like it's just ridiculous. So it's important to have these conversations. And Jeanette, who is also I don't want to focus on her work at Access Bank, so I'm just gonna like say like she also works at Access Bank, but like and the innovation team at Access Bank. But Jeanette, you have the floor. Just like talk about like what this is and what this means, because this is significant and very relevant. So yeah.
Sure. Thanks, Vanessa, for the introduction and great conversations, by the way. I'd like to borrow Sean's words, vibes on vibes. It's been an amazing, like, great conversation so far. I'd like to share my screen. Please let me know when you can see it. Can you see it? Hi, Vanessa, are you there?
I can see it. Looks good.
All right, sure. Thank you.
Yeah, we can see it.
Okay. So Africa Rising Women in Innovation, it's a community of innovators championing the cause of African and New African women in innovation. And I founded it last year in response to the gender and the diversity gap in innovation. I had realized the lack of ubiquity of women founders being celebrated, being talked about, and that was what prompted me to found Africa Rising Women in Innovation. And our passion is women-led businesses. We want to see them flourish and get funded through partnerships like this. When they attend, they get to know what the VCs want, how they can be funded, resources they need to scale their businesses. And we're also passionate about girls and women in STEM, because we are well aware of the gender and the diversity gap in that space, and also the gender parity efforts in that regard as well. And when it comes to discussions around girls and women in STEM, there's always that bias, that unconscious bias, and conscious as well, including the systemic and cultural myths around STEM. It's usually said that the guys would be, great in math or in engineering courses, but that's not the case. There's also research that shows that girls are very high up there when it comes to math and engineering, but because of narratives that have been fed over time, especially growing up, we tend to have that imposter syndrome that enables us just not to focus on that. And I would like to also talk about the gender gap. We are very representation and inclusion focused. And I'll be sharing what Dania Guria said. She's a Zimbabwean American actor and playwright, where she said that I write about African women. That's really my topic. I have no shame or qualm in it because it's very underrepresented topic, which is part of the reason I started to write. So we need to share this narrative. We need to celebrate women, African women, no, African women, women founders doing great things in their fields. I'd like to share some stats with us. As at now, according to the World Economic Forum Gender Gap Report 2021, it will potentially take 121 years to close the gender gap in sub-Saharan Africa. This is a lot of years and there's so much work to be done. But with communities like us that are championing these causes, there's still a hope in the future in that regard. And what's our future? What is the future we want to see? We want to see a world where African and African women are equally represented in science, technology, and innovation. How do we close this gap, you might want to ask? First of all, recognition. Recognition matters a lot. We hear about the likes of the Elon Musk, the Zuckerbergs, because they're recognized, aside from the work that they do as well, but women has to be recognized as well. We need to talk more about what they're doing, and recognition can come in forms of awards, media features, and also continual awareness and sensitization on advocacy, media campaigns, and also helping to demystify the female participation in STEM, in mentoring and trainings. I'm aware that some of the panelists had issues around, had their own opinions around mentoring, but mentoring is something that we do because, for example, I mentor girls as well in STEM, and when they see someone they can look up to, it helps. The boys, they have the Steve Jobs, they have the Marks, they look up to, they hear about them. But the girls, who are they looking up to? Even in Nigeria here, the boys, they look up to the likes of GB for Florida Whip, and then Shola for Pit Start. So that inspires them. But for the women, do we have enough representation to have these girls look up to someone that is already driving a profitable business in tech or in any business they find themselves? And our target is to reach 5 million women. Can this be achieved? I mean, that's a question to pose, but we are taking baby steps on that. And for whatever we are doing, we are trying to drive that through partnerships like this and have more women represented. And for Wangari, she's the first African woman to win the Nobel Peace Prize. And for her, African women in general need to know that it is okay to be the way they are, to see the way they are as strength, and to be liberated from fear and from silence. This this resonates with me. And it's very vital that as women, we need to know what we want and go for that. If we want to move into a tech field, imposter syndrome shouldn't be an obstacle for us to achieve whatever we are trying to achieve. I liked what the panelist said regarding imposter syndrome, how she was able to work towards that, research, YouTube, she's a YouTube standard. So whatever works for you, you have to also key into that and make that happen for you. Thank you. That's all on Africa Rising Women in Innovation. And you can join us on LinkedIn by scanning the QR code. And we are also on Instagram as well. And you can follow us on Instagram. And also, here's my contact. I'm very open to connect. Thank you very much.
Thank you so much, Jeanette. And one of the things we're also going to do after we finish this event is ensuring that there's a link that, is direct to each and every partner that is on this particular call. So if you want to reach out to them directly, you can do that. And one of the things I said initially when we started talking about this is, you're not just looking for VC funding. There's so many different facets that needs to happen for you. There are opportunities, the accelerator programs, the incubator programs that also can happen. And if that is something you need, you can easily reach out to multiple different partners. And that being said, I'm just way behind with talking and everything. But thank you so much, Jeanette, and appreciate it. We're just moving straight to the next panel. I'm going to introduce you. Guy. Oh, God. Can you just be here? Thank you.
Hi. Good evening, everyone.
No, you don't get to be nice and put together to everybody. When you're fully, this is not who you are.
No, I put on my good wig today. This is not typical. I just don't want to embarrass Tekabal or BCM or the other people that know me that are on this call. Blessing, Moyosola,
that's what she said.
Vanessa,
that's what she said.
Yes.
Amy, she said that. I said, okay. I'm going to introduce you to Corona, who is editor of Tekabal, but also
managing editor.
Managing editor. It's okay. Managing editor at Tekabal, and someone who I know, I appreciate, I acknowledge, and she has been really, really, really great to the Ingressive family. We appreciate you acknowledging. Thank you so much for everything you've done for us this year, because technically we could not be us without you. Besides that, she's one of my favorite people. The one that's on a certain way on the streets. But yes, permanent, and she is going to be moderating the next section. Oh God, session. I don't know why I keep saying
Session. It's okay.
Session.
It's okay.
Session.
I got you.
Is the Yoruba something? Session. Gonna be managing that, and just because we don't have too much time, over to you, babe.
Okay. Hello, everyone. Like everyone said, the energy here is just fantastic. I have Zoom exhaustion, Google Meet, all the platforms. So it's good to know that you can actually be on a Zoom conversation and it's lively and it's interesting. So I'm really happy to be here. Vanessa, I just realized that I don't have a bio for Shino in my notes. So I don't know if you can plug something in there real quick, but I'm going to talk about
Shino, please help me help you help
yeah,
us. Shino, please talk about yourself.
Yeah,
perhaps
you might need to do that. Yeah.
Yeah.
So I can see Shalakwe here. So let me start with her. Yeah. Hi, Shalakwe. I met Shalakwe officially, I believe, at the start of this year, right? I just joined. Yeah, it wasn't that long in Tekabal. Yeah, I can't believe it. Yes. Shalakwe is amazing. She's an African woman in tech. She's the founder and CEO of Harvest. Okay. So she's helping. What I love the most about Harvest is that it is focused on building financial services and educating women about financial services, right? We're so underrepresented even within the financial ecosystem. So I love that there's, someone who is like dedicating herself and most of her brain to building this company, this wonderful organization. And more recently, Shalakwe was named as the Nigerian chapter director of Women in Tech Global, an international organization with a double mission to close the gender gap and to help women embrace technology. Not too far off from what Jeanette is doing, so shout out to Shalakwe for that. Shalakwe, it's great to have you here. Thank you so much.
Thank you so much, KK.
And then,
Thank you.
no problem. And then next on my list is Adewale Yusuf. Can he be spotlighted? Is that possible? He's right there. I can see him. And I know he's in his office. They have an amazing office by the Talent QL. I give you guys full permission to go and crash that office and sit in the CEO's chair and just scatter everywhere and then eat his food, because they all get food from eating live. So I've given you guys scopes now. So Adewale Yusuf is the CEO of Talent QL. Why do I love Talent QL? I love Talent QL because a lot of people are trying to break into tech, right? And you guys know that there's a gap. There are gaps that exist, right? We can't even deny it. So Talent QL is plugging a gap. They're trying to train the future, essentially, developers, front end, back end, engineers. I love it. So I'm super excited to have Adewale here with us. Thank you so much for joining us. You just came back from Rwanda. What did you bring for us?
Nothing.
Oh, wow. You didn't even try. Yeah, thank you, Sean. You didn't even try. You didn't even just like try to even, it's okay, no problem. And then our third panelist is Ayobami Gbe. Okay, so he's a member of the Ingressive Capital family, someone who I've also met. I actually met this year, so I'm really happy to have him here. And he's a people person leading corporate partnerships and enabling startup operations in the sub-Saharan market. He actually is a people person. He's very warm. He's very friendly. So thank you, Ayobami Gbe, for being a wonderful person. Great to have you here.
Thank you.
And then finally, we have Mr. Shino, whose bio I don't have. So please, if you don't mind, please introduce yourself and tell us about
Hi, good evening. Yeah, it's great to be here. My name is Shino. I co-founded Trade Lender, who provide financing for MSMEs, retailers mostly, for trade and commerce. So we're playing the trade and commerce value chain at Trade Lender. Yeah.
Okay, thank you so much. So I'm going to set my timer. If I'm not incorrect, it's 20 minutes for the conversation and then questions. I'm going to set my timer for 20 minutes because I'm an obedient child and I like to follow instructions. Unlike some people, cough, cough, mentioning no names. Okay, all right. So our topic today is the impact of shared knowledge in the ecosystem. Super, 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 super important conversation to have. I don't know if you guys remember, but a few years ago, long before I joined Tech About, they used to have this wonderful platform called Radar. And Radar was where everyone went to find information, right? Even when I started at Flutterwave in 2016, Radar helped me. Like, Radar saved my life. I came into the industry very green and I didn't know anything. But when I went on Radar, I would ask questions. I would talk to them about what we were building at that time, which is called Rave now. And, essentially try to pick the brains of people who had been building for a while and who were also open to sharing. So sharing information in this ecosystem, especially the African tech ecosystem, which is now everyone's favorite ecosystem, is very, very important. So my first question, and I want to start with Shalakwe. My first question is, I'm starting with you, girl. So my first question for you is, how has shared information helped you in your role as CEO and founder, especially in the early stage? Like, I know that Harvest is still early stage, but in the beginning when you were putting the business together and the idea together. Yeah.
All right, awesome, KK, and hello everyone. I think we should drop further subs. The comment section is hot, but this is the first panel that is full so far, the third panel, and we're all compliant. I think we should just give ourselves some flowers. Awesome. But so far, great conversation. And like you said, always on Zoom fatigue is real. We should have more fun conversations like this. Life is hard enough. Yeah, so for us, I don't know if I mentioned the last time we spoke, I conceived Harvest circa 2016. And then, just like Muyo said, I could feel when she mentioned the imposter syndrome. Am I fully capable for this? Am I set up for it and all of that? But what I did while pondering on that, even getting a name, was I threw myself, and some young ladies were working together into research. And so back to your question, gosh, we saw tons of white papers, tons of researches that have been done. And that was when I realized that, wait a minute, this is a huge issue here. So why are people, documenting issues and no one is rolling the sleeves to do something about it? So I would say that shared knowledge really helped us and set us on the right footing. Because I recall we are still early stage, as you rightly said, but are very, very nascent stages. Right, it was us and the data and the amount of work, amount of knowledge that we've been able to, simplify and bring out the facts. Because people were just wondering, why would you want to do this for women? Do women really need this? And, going back to, I think it was Francis that mentioned earlier, if Francis is still on this call, that, fintech this, fintech that. And in my mind, I'm still you've not even scratched this fintech thing, because you know what, it is the niche banking, challenger banking is not just a growth stage, but it deeply, deeply satisfies and serve, the people. What we've had so far are, huge organizations, moving giants, very slow, and that's why, for instance, now there's a bank that is, on the top 4 here, and I just keep writing it down, because the last time I walked into the bank to make a complaint, I spent 1 hour, 30 minutes and still left angry, red in the face. So what I'm saying in essence is that niche banking, serving niches and other, so many product challenges that we can solve, they are still there. But thanks to, people like we worked with documents that have been done by, the Lagos Business School, Oxfam, Dalberg, there were tons of them. So it's a knowledge market, and we're grateful for those in the very early stages. And that is not to appreciate even some other clusters because you aside from the data and the work that we've done, you also need to talk to people on the farms, on the fields. And, you know, we spoke to close to 150 women, and we're able to dig up enough knowledge to back this.
Yeah, thank you for sharing. So it seems like, especially in your own line of work and having to go out literally into the field to ask questions and to seek information, there isn't a lot of information that is being shared, right? Especially on how to bank women or even how to bank underbanked people, right? And that's because commercial banks have owned a majority of that space. So they're the ones with the information. Are they willing to share it? Not at the moment. So founders have to do that work of going out, right? So, which leads me to my next question, right? Which is about documenting and documenting to share at some point. For example, Akwe, who is also called Father Mary on social media, once in a while he would drop blog posts about how they started, like how he joined Paystack, or like those early days, you know, designing, talking, all of these things, right? And I mean, he must have written this like years ago, but maybe he saw value in actually sharing it, right? So I want to hear from Adewale, right? So with Talent QL, talk to us about how you're documenting this progress that you're making with the organization, and also with the people that you're working with, right? Because they play a very important role in how the company is growing and how the company is able to achieve some of the many goals that it has.
Right. Thank you so much. Thanks to the organizer and everyone. So when it comes to documentation and archiving or telling the story of your journey, it's very important. One of the things I realized, so this evening I was just sharing with one of my earlier, Tech Point team that we were working together. He was just showing me some pictures when we were starting, and everyone neck was pointing to heaven. So we were just in a very small place. You understand? We're just in a very small place. And those humble beginning were just like 3 people, 3 guys doing, or 4 guys doing something. And recently I went to another startup on that space recently. I just called her, we had a lunch, and I went to our office, and I just took that picture. I said, let me take this picture, because this is a memory, this is a journey. You know, sometimes when you get to this space, you miss those early days. You understand? And also because then it's not much of a struggle. Politics is not as much. Yes, everything is more, let's just get something done. So everyone just come with a fire, and you work from 9 a.m. to another 12 midnight or something. But one of the things we understand is you have to keep documenting this, and we find different ways to document our story and to document these team stories as well, which is very crucial. You know, pictures. So there was something that happened that changed my mind on how to document your team story or your company story. In 2016, Tech Point, at Tech Point, then we did this Tech Point talk where we went to the north. We went to Kaduna, Jos, and Abuja. So we wanted to go to the governor of Kaduna State invited us to the office. Everyone was just busy. And I just said, everyone needs to drop whatever they're doing and let us go to this office. And it caused some issues there because my guy just wanted to work. But we eventually went together and we took that picture in front of the office. And that picture remained one of the strong pillars. Years after we left, it remained one of the strong things we all look at and remember that day. And we remember like, oh, okay, this is what we do. So now everything we do currently, I make sure we document it. I make sure we document the challenges as well. Because sometimes people forget that when you are facing challenges, when you are small, you're facing challenges, it's still a beautiful moment. You will look back at it when the team is 20, when you're not able to have shared lunch together, when you know the team is 40, when you're not able to share lunch, when you guys are not able to sit in the same room, when everyone is in different places. So when you're documenting those type of things, you have to go back, because after everything is said and done and everyone is gone, what is left? Even if the company failed, anyhow, what is left is humanity. And that's one thing you need to preserve, one thing you need to you need to focus on. So, and I always advise startups, see, the small thing, when you and your co-founder, if you guys are just two people, if you guys go out, take pictures, be happy, take it. Things are going to get better. You're going to get to a place where you fly, you guys are in different places you're not able to see. But the little time you spend together, document it and let people know that this is what you stand for. And don't forget, like, the culture as well. You build culture from that. The 2, 3, 4 people you stayed with now, the culture you give to them is the same culture that's going to grow out, and it's very, very important. The first person might be the last person in your story. Thank you.
Thank you so much, Adewale. Love what you said about documenting even the challenges as well, because the truth is, as the years go by, you are likely to forget how it was in the beginning, right? Or you may remember it, but not as clearly as you would have if you had documented it in that moment. And for people that don't know, Adewale actually has a background. He's like a visual storyteller. He's a photographer, and he was founder and CEO of TechPoint for a while. Yeah, so he understands the importance of telling stories. So I just want to like pivot a bit and talk about the importance of working with the networks that we have and working with information that already exists, right? So we talk a lot about sharing ideas. We come together, we share ideas. We talk about how important it is to work collaboratively, let me not disgrace my degrees, with not just our co-workers, but also people in the industry, right? So Ayobami, I have a question for you. How do we go about creating structures, right? How do we go about creating structures that are guaranteed success and also help us execute, right? So this means going beyond coming up with an idea or going beyond sitting with a group of people and saying, let's do this, wouldn't it be cool if we did this? And actually going from ideas to ideating, and from sharing ideas, to ideating, and then to actually executing. How do we go about, what are some practical ways we can create and build these structures?
Cool, thank you. So the first thing I would say is documentation. Ideas are very good in your head, and most times they are very fanciful, but mostly where we kind of don't have the kind of like strategy to kind of bring it now is if you can be able to write what you think. I believe the first point of like even getting it from just thought to action has just like bettered already. So first is like documenting it, and then working with a group of people when you have ideation is making sure like everybody is a stakeholder in the ideation, which is it's something that we kind of do over the fund, where as much as we have a leader, we have team structures, we enable everybody kind of chip in and contribute workable ideation, workable execution into the whole idea box, and we can be able to know that this is a collective goal, and this is not just the goal of somebody that has like a phantom idea and believes this is very beautiful and will make us like the best thing after like sliced bread. So it's like everybody kind of comes in, and that's where you kind of see the skills breakdown. So the skills breakdown means that when Maya or Uwem or Bisola or anybody on the team has an idea and bring it together, I see the fact that my skill is operations, are kind of sourcing deals. OM's skill is like negotiating deals. My skill is making sure there's money in the bank to disburse, and there are things to kind of work with. You already know that everybody's already playing into their strengths, and it's holistic already. And from a point of how do you always do is, first of all, as much as you have like ideators in your team is going to be lopsided if all you have is ideators and you don't have executors that really don't want the stardom and they just want to get shit done. And a lot of times you kind of find teams where a lot of people have very good ideas, a lot of people have very fanciful structures. People have Harvard grade ideations and even documentation, but when it comes to like putting rubber on ground, you just don't find them anywhere. So you have to put actually, it's not that you don't care about the glory, but the glory is not the first thing to them. It's like, how do we, at the end of on a Monday, say we have this, on a Tuesday, calling everybody, getting together in a meeting, moving it to the next stage, getting it going. So there's a lot about team balance here. And also there's a lot about like leveraging everybody's strengths, which means that so far you build a team of well-vetted people. Everybody has a core part to play in getting everything to work. And you need to make sure you use everybody's strength to scale it up. Basically, that would be like the first part of it, and then we can continue.
Yeah, I love what you said about the different types of people you can have in your team, right? Some people are not executors, and that is okay, right? Some people are thinkers, some people are builders, right? And then there are people who can take it all the way. Ideally, those people should work in your operational teams, right? People who are able to hit the ground running and drive, your biz dev people, your sales people, right? And then you now have like junior people who are doing the thinking, they're doing the putting together, they're doing the researching, right? So important to know who you have in your team. And I love that you shared that, because ultimately, when your team members begin to break out to do their own thing, they're going to have their own stories to tell, right? So you don't want a situation where the only experiences that they have to share about working in your company or working with you is that you didn't know how to harness their strengths, or you didn't know, you didn't know how to harness their strengths. And when you don't know how to do that, you end up amplifying their weaknesses. And nobody wants to look weak in front of people at the end of the day, especially not at work. Okay, so Sheena, I have a question, right, about gatekeeping, because, if there's one thing that happens in Nigeria's tech ecosystem, we know how to like gatekeepers. So when I came into tech in 2016, I was lucky enough to have been given an opportunity to grow in a role and to grow in an industry that I had no idea about, right? Now, things are a little bit different, right? Things are a little bit different. And now, sometimes I get DMs from people, young people saying they're trying to break in, but they're not getting jobs because they don't have the experience. They don't know the industry. Nobody wants to give them a chance to get that leg in. Instead, it's about who you know, right? And that's really unfortunate, because even within some networks I'm in, they would specifically ask me, you recommend someone you know, and sometimes I'm like, yeah, but I know this really great person that could really grow in this role, but they don't want that. So Sheena, talk to me about this idea of gatekeeping. And do you think that we have actually shut the doors? Do you think we've shut so many doors to people who are trying to come in? And then how can we kind of reverse this?
Okay, sorry. Let me make sure I'm getting that right.
Yeah.
Are we speaking to being a startup or being an individual?
No. Being an individual trying to come in, right?
Okay.
And how it feels like the ecosystem of current leaders, current founders has sort of like closed the doors.
Okay. Yeah, I think it's important to put your best foot forward early on, especially if you're coming into startup. But okay, for me, I'm going to use myself as a typical example. I came into startup this year. Before now, I worked in a corporate structure. I work in the banking, and I came into startup this year. And I'm not sure I experienced gatekeeping as it were. But the thing is, I think it was important that I came in with value. I came in with something. At that time, the startup space wanted, especially my company, that's my other co-founders. My co-founder had been in the startup space before I came in, and because I had something of value, it was easy for him to get me in and, oh, Sheena, let's build this. So I think it's important to put your best foot forward to come in with value. Now, also in terms of gatekeepers, I would want to completely agree. There are gatekeepers. Even when you are looking for jobs in any corporate organization, you have to have something the company wants. It's not just easy to come in and they get you in. You have to come with something. They are looking for something. They are looking for a particular solution. Product development, tech development, technical and non-technical roles as it were. So what are you coming in with? What are you coming in for? What do you hope to achieve? What do you plan to solve by coming in? I think that's important, more important than looking at it from the angle of gatekeeping. Yeah, I think that's it for me.
Thank you for sharing that. Yes, there is need to put yourself forward, honestly, especially now because everyone is trying to get a job in tech. You have to stand out, which is the game. Unfortunately, the game is the game right now. Okay, so this is a really interesting question. Let's talk about.
Can I say something? Sorry, can I just add something to that question?
Yeah,
because I think it's an interesting question. So I think people need to understand, like, You just need to force yourself into the space at the end of the day. There are a lot of events happening, tech events. Just go talk to founders, pitch to people, keep pitching. So when founders, if you met any founder before, when they are raising, when we are fundraising, everyone is just pitching. The same way you too, you have to pitch yourself at every event, everything you see, every opportunity. There's this proverb I like a lot. I mean, I don't know the right way to put it, which is if you hang around at the barber shop long enough, you will definitely get haircuts. So that's the big, there's no two way to it. Reach out to people on LinkedIn, tweet to people on Twitter, DM people, just keep talking about it. That's the fastest way. And I think I've seen a lot of people. We also have employed a lot of people through that. Yeah. An event is always key. See, event is the best handshake you ever get. And people always remember you from that.
Thank you, Adewale. Shirako, do you have anything you'd like to add to that?
Yes, actually, KK. Okay, thank you. So I just want to mention, just on the flip side, that as you mentioned, I see that fad these days. Everybody wants to get into tech, which is an amazing thing, right? Tech needs a lot of builders, a lot of solutionists too, and that is exactly what my point is about. Be sure that you want to get into tech because you actually want to do the dirty job. So when I say that, like, you actually want to get cracking, like build, and not for, so I see people approach, talk, and then you realize when they eventually come on board, because I am I'm a sucker for giving people opportunities. The star of my team today, she had no experience. In short, it was just at our last retreat, she confided and told everyone that the reason why she was running, because I was literally going after her, that girl, you've got something, come and do this. That she was running because she felt like, she wasn't worthy of that role or something. And today, she's the star of the team. But then you see people come ahead confidently, and then when it gets to doing the job, you just realize that it was just that trend of, working in an airy, fine office and say, I'm a tech boy, or I'm a tech bro, I'm a tech babe. So, we had better be ready to do the hard work as well, and to do a lot of digging. It's a startup. There's a reason they call it a startup. It's intensive, it's fast, it's dizzying, right? So we've just got to be ready for that as well.
Yeah, absolutely. I mean, like, I pivoted into editorial to work with Tech About, and we hit the ground running, and I was like, if anybody ever wants to work in Tech About, I would tell them straight up, look, it's not fun and games, you're coming here to work. So we don't try to like mince our words at all, but that is a good point. So you need to know, like, do you actually want to work because you want to, or because it's just like a trend for you? Because if it's a trend, you're going to get burned out very quickly. Yeah, Ayobami, sorry, go ahead.
I'm going to try to add a point. So Ingressive, it's the first company I ever worked, and I joined just immediately after uni. I would say the fact that people call gatekeeping, it's sometimes there is a bias towards it, and sometimes it's the fact that at different times you might first of all need to come correct first, and then the opportunity. So the thing is, I've seen people now start a blog, research, share knowledge. So a lot of things that people don't know is, you can't convince me enough by just talking that you want to work. Actually, some people need you to work, and they'll tell you, come work for me. It does not have to come work for me first before you work. So there are a couple of things that we also try to encourage people to do, which is part of the things I try to do, which is share skills about VC. I'm not a GP, and my knowledge is still very much still very much limited. But as much as I want to, I read articles, I talk to people, I collaborate with people, we share articles. It makes more people know about VC. So it's at the end, it's do the work on your own, and then find channels for you to make those work visible to people that are in those opportunity space you want to get into. And there are lots of jobs in tech. If you're actually a top star, someone will give you a chance.
Thank you so much for that. Really, really good. Really, really good insights shared here. I want to ask a question about dealing with rejection, because this is us talking about sharing knowledge, right? I want to hear from you guys, especially the founders on the call, how you've been able to manage that. And, people run away from rejection because they feel like it's this big ugly monster. But at the same time, it's like fear. It doesn't really exist, but you believe that it does, and you've like given it so much power, right? So rejection is inevitable, especially in our industry. It is, right? So can you guys talk to me about how you've dealt with it? If you've faced rejection without, like, have you ever been in a situation where you've been rejected, but you didn't think you were going to be rejected? Whether it was by an investor, someone you wanted to mentor you, someone you wanted to share some ideas with, and they were like, it's a bit quiet for that fam. Talk to us about that and how you were able to, move past it. So I will start with Adewale.
So, I mean, as a founder, one thing you should know is you're going to get a lot of rejections, and you need to find a way to make sure you move faster. So let me tell you an interesting. As a founder, when you're fundraising, it's good. You get a lot of rejection. Just know, like, you need to move faster. One person I respect a lot is he always says, see, whenever I'm pitching, I pitch to thousands of people, or 200. That was the time he told me, like, you pitch like 200 just to raise some funds for Florida Wave. Then I think so. I just look at him and, dude, you're a beast. Because for me, I don't think I can do that. But another thing I realized, you get to a place, then you now get to another stage. When you're now growing, you need some talent. That's another stage of rejection. Because this time around, it's not the resume coming to you, people coming to you. Now you need to go and add on for some of the top talents. And then the talent will tell you, like, there's someone I was speaking with today, and brilliant profile. I met her in Rwanda. She's just awesome. And I know, like, oh, this person we need to do together. She was like, hey, she's a manager in one of the big company, a global company. And she said, I'm not ready to leave. And I felt like, oh my God. But at the end of this, she said, oh, I could help. That's another stage of rejection. You keep facing it as you're going. You just get better at it. There was a time an investor sent me an email, like, hey, dude, we won't be able to go along with this and stuff. And nothing happened to me. I felt cool about it. I was just like, oh my God, am I okay? Is something wrong with me? Because you get to a place, you just get used to it. And if you want to achieve something, you just need to be open to rejection, because all you need is one person to say yes. And for you to reach that one person saying yes, you meet a lot of people saying no. You just need to focus. And I think before, I was doing a lot of bootstrapping before coming to this funding type. And I think one of the things that helped me in my early days was the way I see my wife. When in her career, the way she applied for jobs, she just applied for a lot of jobs. And you understand, she will see some, they'll say, no. And she has moved on to the next one. And that really helped me during my fundraising game. But, if you want to build a business, trust me, you are going to get a lot of rejection. And if you want to build a career, you're going to get a lot of rejection. But don't make it personal. It's never personal. If it's okay, you can go back to just maybe running the company bootstrapping if you don't need the cash. But if you need the cash, you will do or die after that. You just need to know, like, there's someone out there that will say yes. And I see a lot of fundraising announcements. A lot of people always see fundraising, and people are excited. Oh my God, this person raised this money. This person, I need to laugh at them. Like, you don't know how many rejection emails these people have received. Because as a founder, it's something you just need to get used to. You just need to know, like, I have to do this, and you have to tell yourself, it's either I do this, or the company dies, or we can't go at the scale we wanted to go. We just make sure we grow. But one thing I can tell you is, in life, you have to face a lot of rejection. In business, founders, they eat it for breakfast. No matter the stage of the founders. I'm actually telling you, like, some founders you see, they're raising 300 million, 1 billion. It's even very tough for them, because now the stake is really high and a lot of things. So everybody eats rejection for breakfast, but people get better at it. And also you have a backup. So when you're sending emails to people, and that's why you see a lot of people say, oh, oversubscribe. And one thing the founders know is until the money land in the bank, you don't get investor. There's no investor. So the person is not an investor because a lot of people will come with a sweet story. Oh, this is that. But wiring, the moment you receive, even when they wire, they can't recall. It's just need to make sure like the money's in the bank before you move on. So yeah, get used to it. That's it. There's no 442 to it. Just get used to it. That's just it.
Thank you, Adewale. Really good points. We celebrate the wins, but we sometimes don't understand that, or we don't know that these founders have been through a lot and they've had to hear no multiple times. Shina, can I hear from you? Your thoughts on this?
Yeah, actually, I think just to add to what Wale has said, one important thing for every startup founder is grit. And I think this is not just to a startup founder. This is a general rule to life. Having that grit, having that say no mindset. When I was coming to startup, I remember my co-founder, one of the first things he told me was, Shino, I wanted to understand something very basic. Building a startup is a marathon. It's not a sprint. You don't just run at it. You grow daily, you build, a lot of this you get no's from partners, from investors, from talents, as Wale has said. But you keep going at it. It might not work in the first year, it might not work fully in the second year, but you must have that belief that this is an idea that works. And especially when you've done your own background work, when you've done the necessary things, that the things you need to make it work. So you have to keep going at it and have that grit that, oh, this is not working here, but this will definitely work. I remember, I think a week ago, I had this opportunity of attending a panel session of some other startup founders, and a lady was saying before her first years, she had 33 no's. And she was counting. Wow. That was in 2018. Yeah, she was counting. And that day, I remember I had to go back and I started counting. Okay, so how many no's do I have? And when do I get the right yes to go on? Yeah, but I think that's the way it works. But at the end of the day, when you get the right yes and you build on that, it gets easier, it gets better, and you can build faster. Yeah, and that's it.
Thank you for sharing. Shakwe?
Yeah. So in addition to what they've all said, 33 is just about starting, really. The rule of thumb is 100, and we say 80 is the magic number if you're lucky, right? It was when I got that realization, because there was a day I was weepy. And then I called a friend of mine, Bukola, and then she said, wait a minute, how many? And I said, like 50. So she said, oh, girl, what are you talking about? You just started now, right? And her business is in England, and she spoke with over 100. And she said, yeah, in Nigeria, I know how these things are. And then I just had to wear my bigger pants. But, like Shino, Wale, and Ayo had said, what I'll just say is that don't overanalyze a no. Initially it was hitting me. I was taking it personal, like, don't overanalyze. But what I did, the trick I did was to, dimension things. And what I do from every call is I take, the positive, the feedback. It hurts at times. And then what it does is, our pitch is a live document, right? So you get some perspectives, and then, you weigh them. I'm not saying that you just jump at everything. Otherwise, you won't even recognize, the business or the problem you want to solve for eventually. So don't overanalyze it, no. But, to be honest, we are having frank conversations. Personally, I still haven't hacked, rejection till now. At the point, if someone just passes and says a no, I can flicker, because it was just something that wasn't working for me. But like he said, like I think it was Wale that mentioned, by the time you get that first check, it gets really, really easier from there. Really, really easier, way easier. And you'll be like, wait a minute, what have I been getting wrong all along? It gets easier from there, and the only way is up.
Yeah, thank you for that.
If I can quickly add something, and I think just to add quickly, the nose helps you to better perfect your product, your what you are trying to sell, because especially when you get constructive feedbacks, it helps you to better work on what you have. So you should take it, get constructive feedback, go back to your deck, go back to your business and try to add that. So it makes things easier going forward.
Thank you for that.
Yeah, if I'm to add something, I see it from the other side. Is not always a founder's fault. A lot of times that's the thing that we kind of need to communicate, that the no, it's really not you, it's not the product, it's not the market, and it's not the essential things that VCs kind of like enumerate to be like, oh, if I have all this on the pie, you're perfect. It's really like you have all those things and they're coming from a point of, oh, I have somebody as beautiful and as attractive as you, your direct competitor with me. And because a lot of times the rule of early stage investment is, so you're not seen as a spray and pray investor, you have to choose your battles, which is choose a founder, stick with his model, stick with his business, and you're not having conflicting portfolios, which means that people in one field and they want to share you their report and one tell them like, his report I shared with you last week that this person is implemented as a strategy this week. And then it looks like you are the leakage in their business. So a lot of times is you have every essential things to work. And another some time again is no is coming from a point of a founder has a deja vu from a particular sector, which means that I've done this sector before. I just don't feel it's prime or right for the African market. And I don't want to do it again, which is I've burnt money here before. I don't want to burn money here again. And a lot of times it's you are actually the right product at the right time. But the deja vu keeps playing in their head like, oh, what if is my misjudgment and I'm about to do another mistake here? So, and I think the last one would be, as much as possible, a very good way to scale the no challenges is know the investors you actually want. Cut them, which means that there are some non-negotiable investors that you as an investor, as a startup founder, you actually want. There are some people you look out for like, oh, if this person is on my side, it's going to be very, very great work. And I think it takes time, which is engage them more as like a friend, an advisory, more of like a get to know you conversation. With time, even if they would say no, they would shop you around to the people in the same network that form the same service. So you might be getting a technical no from them, but you're getting an access to another yes. So these are the essential things that we should look right above the rejection circle. That is just, like she said, it's just like it comes with it. It's like the good that carries the other not so good alongside it. And that would just be my feedback.
Okay. Yeah, thank you guys so much. Yeah,
Ceremony, I'm just gonna leave you to like round up. Like this is closed. Let's close. We gotta.
Yeah. I was just about to do that. Go right, Vanessa. I've seen your message. Sorry, guys, we're out of time. Although I feel like this is a juror because if Blessing and her people did not go over, we will not be here. But thank you to our wonderful panelists. Thank you for joining us. Please connect with them. They are doing wonderful things in the ecosystem, and they will be people that you want to keep an eye on and watch what they're building and what they're doing. Thank you, guys. Thank you, Ingressive, for having us. That's it for me.
Thank you very much.
Thank you, Vanessa and Ingressive team. Thank you.
Thank you so much, guys. Thank you so much, everyone. Just before we go into the next session, which is supposed to be now, I'm just gonna confirm. Maya, can you just join the call? Hi. Hi, Maya. Ashim, are you here? Fola, are you here? Oh, look at you people. So precise and concise and timely. Oh God. Adenika is here as well. Hi. And finally, moderator of live, Benjamin Dada. Are you here?
Yeah, I'm here.
Yeah, you gotta show your face.
I'm turning my video in a bit. Hold on.
Gotta work with that. Look at you guys, so pretty. Ah, why so pretty? And timely too. All of you are just being like, all of you have been really like working with the time and messing with the time, but okay, no problem. Hi guys. I think everyone's favorite part is probably this. And it's pretty much just like talking about all the different parts of like the venture capital in Africa and like investing in Africa and the businesses in Africa and the multiple facets of what it is that it requires. Anyway, I'm just gonna introduce you to Benjamin. Benjamin, you do not need too much intro. He is someone who has been significantly relevant in the ecosystem. He has contributed in multiple different, you already know like his platform, but he is currently country manager for Stitch and doing actually amazing job since he started doing that. However, I'm not going to let my words decipher what it is that he's going to do. I'm going to let him just introduce every single person on this panel. And on that note, Benjamin, over to you.
Thank you so much, Vanessa. Guys, pardon if my voice is a bit down, but I'll try to project.
Your voice is fine. Don't worry. It's okay. Your voice is fine.
Okay. Nice. Thank you so much. I know it's been a long day for everyone. I'll try and keep this as brief as possible. Hi, Blessing. Hi, Sean. I see you guys. Rume. So my first panelist, Maya. I've known Maya for like 4 years now, I think. And she's the founder and MD at Ingressive Capital. You all know Ingressive. That's the organization that has brought us together. It's currently a 10 million VC fund. And that's Maya. Keep it short. Ashim is the managing partner at Upskilling Capital. I once interviewed her when she was at Tech Experts. Upskilling Capital is an early stage sector agnostic VC fund that's currently investing in tech and tech-enabled startups. And then there's Fola Olatunji David. I feel a bit proud to say I know all these people, but yes, I know Fola as well. Business advisor, strategy consultant. She used to be at Google as one of all those startup daddies.
One of my best friends.
Yeah, and then, he's worked with a couple of startups and SMEs by virtue of his work. And then Adenike, is she on the call? Yes, she is. I've seen her. Interacted with Adenike.
Am I invisible?
Online. No. It's because I've just never met you in person. But I know how you look, yeah. She's an investment professional focused on investing in early stage startups, and she's a principal at Future Africa. Okay, thank you, everybody. I think today I want to ask the unasked questions. I want to ask questions that many people are thinking, but they don't have anybody to ask. So if you guys are able to answer, fine. If you're not able to answer, that's fine, but it's just nice to hear you guys' perspective because there's no right or wrong answer. My first question, I know everybody has talked about venture capital funding and all. I want to talk about founder liquidity. So at what point as a founder should you be looking to take money off the table? So either from selling some of your shares, or like at what point as a founder should you be looking to take some money off and maybe go invest in other startups, or just use it for your personal flex? Who wants to take that question? Yeah, or I'll nominate, or the audience can nominate somebody. I can do either Maya or Fola.
Okay.
Okay, Maya, go. Yeah.
I don't have anything particularly deep to say on this one, but I can say it depends on a few things. Before, I don't ever think that there's a specific, one answer fits all for everyone, but the way that I would think about it would be, one, is it going to potentially be a red flag to my next financing round? And how is it going to be perceived by my team members? Those that may have some potential weight or influence in the decision. So team members, investors, et cetera, et cetera. One or two, I think if you communicate these things effectively and you let people know before you do them, that's 99% of the situation. You can craft the narrative how you decide to go about this and make sure that it comes out good or comes out well for everyone, as opposed to just like making the sale and then your investor finds out about it and then your potential follow-on lead is like, what are you talking about? You're selling your company and not telling anyone. But if you let it be known, like, hey, I have life goals, you know, I'm a human too, and this is what I'm looking to do. People really understand that. And a number of our portfolio companies have realized liquidity, and it's okay. And as long, again, as you're not selling your majority stake, there's a difference between selling 99% or 100% of your ownership in a business than selling, say, like 5 to 10% stake in a priced round. So I think it's really important to carry your investors and your team along and make sure to craft the narrative before they find out about these things.
Fair enough. Does anybody want to add to that answer? I think Ashim, anybody?
Yeah, sure. I would say that, you know, being a founder is tough. It means that you have a lot of people think you're rich because your company is valued at a certain amount, but a lot of that money is illiquid, you know, which means that it's basically just signatures on a document. Like Maya said, manage your stakeholders, be very transparent about it. But at the end of the day, know that you're the one building the company. Everybody else that has a stake because you are building it. Don't make a sacrifice that would, you know, you don't shoot yourself in the foot, essentially. Have frank, open conversations with your investors, because to be honest, investors might choose to sell their stake as well. So as a founder, you do have the right to sell some of your ownership to maybe via secondaries, during a follow-on round, whatever. Just make sure you're communicating well with other investors. Make sure that you're not cutting a deal that is significantly different from what everybody else is getting. It's important to be honest, because word does get out about these sorts of things, and you don't want to be caught trying to, you know, be dodgy or, you know, play things a certain way. So yeah, I think that go for it. Just be very open, very transparent, and manage your stakeholders.
Yeah, and if I can just add to that, I think Maya kind of touched on it, but just to elaborate that timing really is key, just like with everything else. So, you know, as you're looking for that liquidity, you've also got to look at sort of the macro within your company, right? Or within the market. What is going on in your company at the moment? What is the signaling due to your company, your employees, you know, your investor base? If you are, you know, maybe you've either just completed a round or you're about to go for a round, you know, is this the right time to do it? So I think, you know, timing really is important. And I think the other thing, which is probably more intrinsic, is, you know, question yourself also, why are you looking for this liquidity, right? Is this just because, oh, you know, you want that flex and all your friends went to Abu Dhabi for the F1 and you were in Nigeria? Looking at yourself, right? You know, so I think, you know, it's important also to understand your ambition behind it. And I'm not saying wanting to go to the F1 is wrong. It's just to investigate with yourself and sit with yourself and say, you know, is this the right time for myself to then in fact seek this liquidity for these reasons?
Thank you so much, guys. I feel like many founders probably have that question, and they just don't know how to put it to the table. Like, I'm stuck with 20%, 40% of this company, and yet I'm living in Ogudu. When do I get to take some money off and go do things? So if you're a founder here, I'm speaking your mind. The second thing I want to talk about is ESOPs, right? Especially for a venture-backed company. So how do you go about allocating stock for your employees? Is it the VC that always advises on the amount of shares that should be dedicated to ESOPs? Or like, how do you as a well-meaning founder go about, you know, discussing ESOPs to your investors? And happy for anybody else to also opt in to take this one. Yeah.
Yeah, I can jump in here. Can you guys hear me?
Yes.
I kept getting disconnected. So, you know, an ESOP, employee stock option pool, really is about, motivating your key hires and your early hires with a part of the company. So if you think about it that way, like, look, these are the people who are building the company with you. In a lot of instances, these are people who are from day one, or month one, or year one. And so, but if you want to take a step back and look at how practically organizations start or startups start, most times it's 2 guys or 2 girls in a room who just like, hey, let's start this company. We just want to build products. And sometimes along their journey, they forget to compensate the people who they're building with. And so that's why you find that it's the investor that reminds founders that, hey, you should have a stock options pool that you then assign equity or stocks to your colleagues from. I think what tends to happen is as founder information and founder education gets to a certain level, founders are now starting to think about that from day one. I personally haven't seen an investment round where the investors are like, hey, you gave too much equity to your staff. Most times, usually you didn't give enough or you didn't plan ahead in the future. So I think what best practice will start to happen is when people are splitting, they're not just going to say, okay, we'll do 60-40 or we'll do 50-50. They'll be like, okay, we'll do 45-45 so we can have 10 for the stock option pool from day one. And then as we bring people in, we start to give them 0.whatever%. So if you have a good investor or good angel investor that reminds you at the early stage, fine. But typically you can't get past the seed stage or, when you're starting to get to the Series A without them pointing out that you don't have a stock options pool. Because, when you're starting to attract talent, that is most of what your senior staff will be looking out for is the equity that they get. It's not so much the base pay because you can't pay them as much as some of the other companies out there. So I think it's good practice to start thinking about it from day one. But most times as you go past that seed stage towards that Series A, you find that most investors enforce it.
Okay, makes sense. Before the next person adds, feel free to add a particular amount. Let's talk numbers. How many % of the company makes sense for employee stock options?
Yeah, so sorry, Maya, you wanted to jump in?
No, I wasn't going to give specifics. All I was going to say is you want to make sure that your team members have aligned incentives, and that's done through equity, as opposed to people maximizing the salary that they get today or the money that they get, whatever side hustle or whatever that they have today. You want to make sure people are focused on the same long-term outcomes as you. And the best way to do that is making sure that they have ownership in the organization and meaningful ownership in the organization. I've also seen companies, they're like, oh yeah, we have co-founders. Each one has 0.75% of the company. And I'm like, how long do you think those people are going to be invested in this organization? And do you really think that's going to keep everyone on the team up until 4 a.m. on a Tuesday, Wednesday, Thursday, not doing holidays with their family and friends because they're committed to this business for life? You decide how committed your team will be by how much you give them in the organization.
Okay, thanks. Please, somebody give us numbers. From what you've seen, how many % is dedicated to employee pool?
So typically,
10%. 10% is a good rule of thumb. Oh, sorry.
Go on, Lincke. 10%
is a good rule of thumb. A lot of people start there. And again, it depends on the organization structure, how many people, what roles you're looking to assign equity to. So I've seen people say, okay, based on our org structure today, we envisage that we're going to have country directors, we're going to expand into so place. And based on that, we're going to set aside 0.5% equity to give to all of these prospective hires. It's a pool, right? So 10% is a good rule of thumb, but there are people that go higher than that. But I'll say 10% is a good place, very comfortable place to start. So people also don't feel insulted. Because if you give someone in management 0.1% of the company, you might as well not give them anything.
And a good thing to remember is it's an allocation, it's a reserve. So it's not like when you say 10%, you're giving out 10% today. Exactly. You could allocate, they're going to give out 10% for the stock option pool, and then you only assign 3% in this round. And then as you go forward, you just keep an allocation for future.
I even think the real conversation to be had here is how feasible it is for the employees to actually exercise their options. You know, it's one thing to have those options allocated. It's also another thing for them to be able to exercise them, because sometimes people play for games, right? You assign a stock option pool and the pricing is so high that realistically, none of those people are going to be able to exercise those options. So you might as well not give them anything. So there's also that conversation as well, you know, balance. You should price, you should offer those options at a price that is feasible for them to exercise it, not at a price where they run into debt trying to exercise the option. So if you're working in a startup and you've been offered options, that's something to look at. Find out how much it actually costs for you to exercise your stock options. It doesn't mean you own the equity yet.
Okay. Thanks, guys. So 10% rule of thumb, it's not cast in stone, but you know, it's usually like a pool and a reserve, and it's used to motivate employees. My next question, I'll move a bit now to the actual funding and all. So this is a trick question. Given how much capital or given how much interest, you know, many people are putting into Nigeria and even just African space, as a current investor or operator, if you were going to start today, would you rather be an investor or an operator because of how much access to capital you can have? So I can ask everybody around the table, but anybody can start.
Okay, I'll go first since nobody's going. I would rather be
the bed box for me. It's the bed box for me.
No, I would be an investor. And the reason is, as a person, I find I derive joy in helping people achieve their dreams. And being an investor also allows you to work across a large portfolio, or a portfolio at least. So you can work on fintech today, tomorrow morning you work in insurance, next tomorrow you're in education, and then next week you're sipping pina colada on the beach. While the founders are fighting their database. I'll let the others go.
Okay,
yeah, I agree with you. Fala, I agree with you. I think I may just be biased because I'm already an investor. So, you know, it's kind of difficult probably to put a different hat on. But absolutely, I think, you know, the single biggest advantage of being an investor, and you spoke about this, is the diversity of impact that you can in fact have. And the impact can look in, you know, like so many different things. And we're not just talking about financial investment here, right? We're talking about employment of people. We're talking about education. We're talking about, you know, socioeconomic impact. So I think, you know, as investors, we do see that really big picture, and we understand how, you know, financial investments can in fact go so much further. And so, you know, with that in mind, for me, I'd always love to sit on that side of the table.
Okay, two investors, Maya. Safe space.
Would like to be both. I feel that I am. I would like to build a venture capital fund and scale a venture capital fund in an entrepreneurial way. Ooh, whoa. Yeah, no, and I feel like that's roughly what we're doing is and if you do it right, it's very similar to being an entrepreneur in that investors who, like good investors, are service providers to entrepreneurs. And you have to do essentially customer surveys and be tracking the needs of your target market in the same way that an entrepreneur would. And we take that very seriously and take that to heart and try to build out the organization for the needs of the startup. So I'd say both.
Yeah, I think it's what I'd probably call an invested investor, right? So, you know, I love the way you said that, you know, investing in that entrepreneurial way and in that entrepreneurial approach. And I feel like all of us that are on the call here do exactly that. So, yay.
Yay.
Adenike.
From an economic perspective, it makes more sense to be an operator. If you're a VC, a lot of people think VCs have money, but investors don't have any money. You know, You spend all of the money running your operations. You are beholden to people for 10 years. You have to return their money. You only make money when they make money. So from a financial point of view, it makes more sense to be an operator. You find a really big market, focus on it, raise capital, build it, grow the business. You can exit the business whenever you want as well. More freedom. So I'll say operator.
I love this. Thank you. Thank you very much, guys. It's quite balanced. Two investors, one operator investor. Nice. I think it's really interesting because when you think about the fact that some entrepreneurs are able to raise at a very high share price, you're like, what? Someone is going to give me $3.5 million and I'm not going to give them more than 20% or more than like a particular amount of my company, then I'm good. Anyway, back to my next set of questions. When you think about what you say,
can I just at the end of the day, I think even as investors, you also have to ask yourself, what is the value add and the unique perspective? And especially because your question came from the standpoint of there's now so much money available. So at some point, money is not going to be, money is just going to be the entry floor. It's just going to get you into the room. And then there's like 1,000 of you pitching to start off like, here's my money. Here are the other things I need to do. So, and sometimes being an operator gives you that empathy, to just understand the perspective that the founders are going to come from. And they listen to you sometimes even more. So I'm still on the investor side. I'm just adding that extra jara.
No problem. We'll leave it up to the audience to form their own opinions on what you guys have said. Let's talk more practical stuff. So given what you've seen for African startups, right? How many percent do founders, or like dilution, think about it. So how many percent do founders or startup companies give out at each stage? And I feel like this is important because some people are at that next round of funding and they're wondering, what really makes sense, what's obtainable in the industry. And it's usually a very sensitive topic. Nobody's ever going to tell them, oh, I got this amount of money for at this dilution. So like, let's talk about from pre-seed to seed to Series A and Series B. How many percent of the company have you seen, being given, or like how much dilution has happened to the company? So anybody can start. Give me hardcore numbers, please.
The reason no one talks about it in specifics is that there are really no specifics. It depends on a number of variables, like the founder. If you're a very experienced founder, you obviously be able to give away less of your company for more money, right? Whereas if you're just a first-time founder, you might give away, say, 5% of your company to an angel who is really going to help you get things rolling. And none is better than the other. It's just like, what do you need at the time? It depends on the markets that you're building in. These are just random examples. None is better than the other, but you might be able to get away with giving away less of your company for more money in fintech than doing the same thing in, say, education, right? Because there are two different markets with two different levels of demand. The country and the markets and the type of product as well matter. So there's really no give away 2% at pre-seed, give away 3% at seed, give away 5% at Series A kind of mathematics. It depends on how well you're able to negotiate, the type of investors that you work with, how much money they like to invest and how much of the company they like to own. For example, when you go to YC, it's a very clear conversation, right? 7% for 125K. If you like cry blood, there's really nothing that you can do about it. So it really just depends on what you're building, who you are, your needs at the time. There's really no example. But I would always say, like, if someone is asking you to do something like giving away 40% of your company for $200,000, that's obviously very ridiculous, and you can get a much better deal, right? If anything sounds predatory or too good to be true, you're probably better off staying away.
Sure.
Yeah.
Duly noted. I think for the next set of people, feel free to give us maybe your own frame of reference. So say maybe in fintech, this is what I've seen. But I want numbers. I want like actual numbers. Yeah.
I'm not going to help you with numbers, Benjamin, unfortunately, because I completely agree with Adinike that, it is so hugely dependent on so many things. And I actually think that giving people numbers may set people up for failure, because if I come on the call today and I say, you know what, in fintech, don't give away more than 10% at seed level, and then somebody's trying to raise funds and they can't achieve that, and then they don't end up raising funds, nobody is helped by that. So I think one of the things that I will say, however, is that as a founder, just be very cognizant of your cap table, understand how your cap table looks, and really understand what dilution means. Because I think a lot of, especially first-time founders or inexperienced founders without say any, YC knowledge or any of that, don't always understand what it means to raise money. They don't understand what it means to give away equity. They don't understand how dilution looks like on a cap table. So as Adinike said, if I give away 40% of my equity today for, doesn't matter the amount, right? Let's call it 200K. And then in further rounds I'm raising, always remember that it is my equity that is further going to be diluted. So you've got to also understand, well, what is my roadmap, and, how far in the future can I look? And sometimes we don't know how far, the 200K, 100K, 1 million is going to take us, but, try and at least project a little bit in the future so that you have a view of what that cap table dilution is going to look like as you go along. And this is where, for instance, the employee stock option pools are really important to start thinking about in the beginning, because if you do have that as a reserve, then, as you have your cap table drawn up, you already know that you've got your whatever 5 or 10% kind of set aside already. So I think cap table understanding is just really important in this conversation. Don't be fixated on the exact numbers or percentages to or not to give away. Rather really understand your business, understand the investors you're pitching to. There's some investors who very clearly say, I like to have 10% for X amount, and this is their mandate, and they make no secret about it. So I think doing your research as a founder, especially as you're raising, is really important, so that people can't also pull the wool over your head, but also so that you don't go into conversations expecting something that is just never going to happen.
Okay, noted. Thanks. Maya?
Yeah, I think the answers so far generally cover. I don't have any hard and fast. I know that, what I can say generally, as we're looking at opportunities as pre-seed and seed stage investors, we anticipate that at the pre-seed, we will be diluted 75% to the point of liquidity. And I guess as a founder and team members looking at things the same way, unless there's an intent to buy secondaries and increase ownership, et cetera, over time. But yeah, I don't have a hard and fast rule. And I think things are changing. Our ecosystem every year since 2016 has seen 2x increased growth in the amount of VC dollars coming in. And the sort of even 6 months ago, the average valuations at a 1 million raise pre-seed are different materially than the valuations today. And so I'd say, I don't know, do what you can do, but not so much. Except for with us, don't just do what you can do. No, I'm just kidding. But I would say it's most important. The things that I think are really important to prioritize are the venture capital firm that you work with and the individual partner that you have, and building a relationship with the actual individual at the firm, because they're the ones who are going to either support you and your further growth and your future raises or not. And so I think it's, as opposed to 10% versus 12% versus 20%, of course, have your general frameworks, and two things: work backwards. So have a general idea. Okay, we want to reach these big milestones over the next 5 years. And of course, these things materially change, but have a general idea of these and say, okay, we need to raise 3 times in the next 5 years. And these are the general raises that I think we're going to need to do. And this is the traction that I think we can achieve to get there. So working backwards this is how much I can give out now, knowing that in 2 years, I'm going to raise this much at this probably valuation. In 2 more years, if we continue growth, I'll raise this much at this valuation, just to have some sort of general framework. So you're not just like shooting in the dark. And then when you go to market, of course, these conversations, you know, change and who knows what's going to happen, but really, really prioritize the firm that you're working with and make sure that the individual partner has access to connections, to markets, to fundraising that can specifically benefit you as a founder.
All right, thank you, Maya. Fola, anything to add, or I can move to the next question?
How are we doing for time? Are we on track for time?
Yeah, I'm on track.
I'll just add that. Look, so I mean, when I started actively investing in Nigeria, a few years ago, not too long ago, it was probably 5, 6, 7 years ago. In fact, when we started Ventures platform specifically, we're giving 20K for 10%. And it was like mind blowing. And everyone was like, oh my God, these people must have stolen the money. Otherwise, why would they give a founder 20K, you know? And just, you know, 5 years down the line, you and your 20K check will be at 0.0 something percent on somebody's 3.5 million pre-seed raise. True story. But, you know, it's really about, you know, what is obtainable in the market and what you're trying to, you know, what you're trying to accomplish. Today, I see a lot of founders raise, rather than think in terms of runway and how much money do I need, it's more ego driven. You know, it's more like, oh, I don't want to start a startup that doesn't raise $1 million. You know, TechCrunch is not going to write my story if I raise 300K. And, you know, I know every other person has shied away from target ownership and percentage you give out, but you know, it's a question I get asked all the time. You know, how do you think about equity? How much equity do I give out at this stage? And one other thing is funding rounds. I feel like in like 3 years, there's going to be like pre-seed, or like before the seed, we're thinking about raising a seed at some point before the seed round. You know, I know founders that have raised money 3 times and they still call it pre-seed. I'm like, at what point are we going to see this seed? I think a good thing to think about is everything before Series A, call it seed. So whether it's pre-seed, pre-seed, seed, you want to shoot for somewhere between, and guys, don't crucify me. You want to shoot for at least the max 15% giving out. Now, I've seen people give out 5%. I've seen people give out 10%. In some extreme cases, I've seen at the seed stage, they've given up to 20%. But it's more about that question of, you know, how much value are you capturing and how important is this to the trajectory of the business? If I gave out 15% to this set of partners, it's usually a good idea to give it to multiple sets. You have a lead, you have multiple people that can help you get to certain milestones. You know, think in terms of runway, in terms of milestones. I'm doing this to get to XYZ. You know, I've built something, and now I need to grow to a certain point. At the Series A stage, you're probably looking at giving up to 25% or 30, in some cases 35% of your company out. And it goes on and on like that. I think the moment you start to think about going the venture-backed route, you know that if most founders, you know, like Maya said, 75% dilution is what they're thinking about at the end of the road. Most founding teams own about 30% of their company by the time they exit, if they do exit. And those are the great ones. Some are sub 10%. So you also want to be mindful that, look, the dilution is going to happen, and it's going to happen very quickly. The people with their preferred shares are going to be calling those preferred shares before you every single round. And so you want to be mindful of, you know, how much, and it's not just money. A lot of people are blinded by the large checks, you know. A founder who has been struggling, you get a 250K check. At that point, you're not even thinking, you know what, forget about my future will be okay. Just give me the money right now. So you want to be mindful that, is this a partner that can get me to the next stage? Will I still be attractive? I think that's the key thing. Will I still be attractive as a business to other investors at the next stage?
All right, guys, thank you so much. This has been very exciting for me, and I hope some people got direct answers to some of the questions they had in their mind. My last question and parting question will be venture capital, term sheets, all of these things are buzzwords that many people still don't understand. How does a founder go about learning about venture capital? What resources do you recommend? That's my final question. Yeah. We go around again.
I'll kick it off. I think Google is your friend, as we like to say. There are a lot of free resources out there. You know, take the time to educate yourself before you start raising funds, because it is not as straightforward as the TechCrunch headline always makes it seem, right? So it takes time, it takes energy, it takes effort, it takes connections, it takes resilience, but it also takes understanding term sheets, understanding some of the legal speak behind it, understanding your cap table, for instance, understanding what type of a contract you may want to have if you're raising a safe round, or some people will say, oh, we'll only come through a convertible note, and you're like, okay, never heard of that, no idea what that is, how do I go from here? So trying to educate yourself, and even before you start raising. There's also a lot of great literature out there, to be honest, a lot of books that you can pick up that talk about term sheets and break down each and every single items, that talk about due diligence and what investors actually look for, VC investors especially. But I think also understand who your audience is, right? So, I mean, what I see is that typically at the moment, even at the pre-seed stage, the audiences is quite modeled up, where you have angel investors, angel networks, together with some early stage VCs, already all sort of coming together to inject money into startups. And because those investors are also all very different, they may come with very different terms, right? Where, individual angels may not be as sophisticated. I don't mean that in a bad way. Whereas there's some, VC networks who will come and will be very sophisticated with different term sheets. So understand who's your audience, so that you can also understand, how you need to approach the audience and what you can expect from that audience with regards to term sheets. But, really, I think there's a lot of free stuff out there. In addition to that, there are a lot of incredible accelerator programs out there that you can apply for. There's some Africa-based ones, a lot actually. There are some worldwide ones, there's stuff like VC Included, there's VC, there's so many different ones to help you understand both the investor point of view as well as an entrepreneur, what to look out for. So I think do your research and then, leave the rest up to your good fortune.
Thank you so much, Ashim. Duly noted. One more person or two more people to add, even though many people have already dropped comments on the chat. So Fola, maybe you add, since Maya and Adenike have added.
Yeah, I said check out the Ingressive blog. I don't know why Maya isn't plugging it there. It's a really good place to start. I think a lot of the things that that you learn in building a startup comes from experience, but you can't take away the part of actively learning. So having it breaks my heart when I see founders or would-be founders who don't take out time to learn, to read, watch, listen to other people. They're great books. Venture Deals, I don't know who recommended Venture Deals, Be Smarter Than Your Lawyer. That's a great book to just get an overview. But if you want to do practical learning, when I joined VC, or when I joined the startup ecosystem, I literally sat down Tech Cabal for like 3 months. I was just reading every day at work, my consulting job. I would just be reading, every day, just reading Tech Cabal, just to get a sense of what all these things mean. And I like that all our publications, that our blog, Tech Cabal, TechCrunch, and all the blogs. I like that they actually take out time to have different series that are not just announcing fundraisers, but actually talking about what this means, what that means, and having interviews. So I think that you can't take away the place of actively going out to learn. I think it was on the last panel where they were talking about what Ingressive does, where they talk about the headlines and what it means and the implication of that. I think that's also something that teams need to incorporate. You just take some time out to just discuss what's going on in the ecosystem and what does this mean. You'd be surprised that some things that you assume that everybody should know, people don't know it. So yeah.
Thank you so much, guys. This has been good for me. Maya, you want to add something?
Yeah, I was just gonna add, 20-minute VC is really awesome. And then, the venture deals is really helpful. And also, yes, you're right, Fola, I didn't plug Ingressive. I'm gonna plug Ingressive right now. You guys should all be following us on social media. Ingressive Capital actually does drop a lot of gems for early stage founders and explaining and breaking down all these concepts. And Blessing mentioned it before. We have a team call 3 times a week, and on every team call, everyone has to come with a piece of information. And on Wednesdays, we also do like a learning session. And so that continued learning as far as ways that you can make built into your team processes, so you don't even have to think about it and be like, oh my gosh, I should be learning right now. So it's literally a requirement that everyone in the organization, and it builds sort of a culture of not just you as the CEO and leader, but everyone as a part of the organization is really, really committed to continuous learning, and also in the specific area where you guys can teach each other. So as a little hack that makes everyone's life a little bit easier, I think I would recommend that.
All right, thanks. Handing this back to Vanessa before she chases me out of here. But it's been a great session, guys. Thank you for indulging, and thank you for answering the questions. I'll stick around. Yeah.
Thanks, guys.
Thanks so much. Bye.
Thanks.
Hello, everyone.
Yeah, we can hear you, Vanessa.
Okay, lovely. So just thank you so much for everyone, and thank you so much for that entire insightful conversation. Just to round this up, we're going to have 2 things. So one of them is 2 interesting panels who's going to share their details with us. Okay, can you see Vanessa? Okay, lovely. Can you see Vanessa now?
Yeah, cool.
Lovely. Hi. Okay, cool. So there are 2 parts just to round this up. So we have the first part, which is just having Josh, who is a co-founder at Easy, just close up. But before he does that, we have 2 panels, 2 people who are just gonna come up and do quick presentations from AFF. Shay, are you on the call? Shay, are you on the call? Okay, I don't know if Shay's on the call. But that being said, Josh, can you just come and do the closing speaking? Hi, Josh.
Hi, Vanessa. How are you?
I am good, thank you. How are you doing?
I'm doing fantastic. I'm doing fantastic. Thank you so much for having me here.
Happy to have you. So I'm not gonna do any intros because I want you to speak your truth and speak your living and speak your reality. So I am gonna let you do your intro and tell every single person about everything you've been doing for Easy. So hi, Josh, and Josh is closing for us, but just quick one before you start, Josh. The guys at AFF, I can't see you guys, but if it doesn't happen, it's okay. We would just put you guys on the email and website. That's okay. But we're gonna wrap up because we gotta wrap up because yeah, everyone's gotta go. Josh, tell everyone, and after Josh, then we're gonna have Esther from Founders Institute just tell everybody what is exciting. Before then, Josh. tell us what is exciting about tech, e-commerce in tech, and like the importance, like, you know, in the global system. So.
Absolutely, absolutely. Well, thank you so much for having me here. It's really a pleasure being a part of this event, especially closing it out. I really appreciate the honor. I had a lot of, I heard, was on the call a bit earlier and heard a great discussion about, you know, the VC space and how that's really driving investments, especially in Africa. And I think a focus and emphasis on e-commerce in that tech space is, you know, pivotal to how the world will operate in the future, specifically within Africa. So I started this journey, I would say back in 2012, where we first started our first African-focused business, and that was Relief. So many of you probably heard of Relief before. It's a tech-enabled palm oil processing plant operating in Nigeria. We have a processing plant in Akwa Ibom. As we started Relief, we went through multiple pivots to arrive at the current model. But along the way, we worked with small shareholder farmers. And one thing that we saw with these farmers is that they did not have access to critical electronics that they needed to operate their businesses efficiently. And so this was everything from a smartphone to a laptop or a tablet system that would allow them to figure out, you know, when is it supposed to rain? You know, what kind of fertilizer can they buy for their crops? So it was just, there was a complete disconnect from being able to access this information that really everyone in the moderate or the first world countries are able to. And so seeing that we could bring these electronics that were relatively cheap to us and give them to these farmers and really allow them to operate their businesses on a much more efficient level was eye-opening for us. And the impact that we saw there was that, you know, we're doing this little thing, equipping farmers with phones, and they're able to operate their businesses much more efficiently. So we pivoted Relief multiple times to where it is now. But I think that was like one learning that we took away from us as we were growing that business. So fast forward 5 years later, I started getting into the electronics resale space and seeing like how these devices impacted people from our experiences in Relief really, I guess, pushed me to double down on this space. So we found it easy about 2 years ago with an online marketplace that connects wholesalers in the United States to businesses around the world. And one of our key markets is Nigeria. And so what we saw is that there were businesses in Nigeria that were selling these devices, you know, in Computer Village, but weren't able to access them as easily as you would think they should be. So a lot of these people were operating in these forums or these offline channels, trying to find devices that were readily available here in the United States. And so we started with smartphones because that was something that we understood there was a great demand for. But as we've started to expand, we've seen that there is demand in almost all electronic product lines, anywhere from laptops, tablets, headphones, watches. But doing business in Nigeria, we found was difficult because there were no set up payment rails or logistic rails that would efficiently move products or money from the United States into these areas of focus. And so one of the biggest components we have to build out in this business is allowing people to trade seamlessly from Nigeria into the United States. And we've been working on a number of solutions to enable those seamless transactions. The first was allowing vendors to be able to pay in Naira. And how are we transferring that money back to the United States to get those wholesalers to move the product into Nigeria, right? And there were a lot of, I guess, around the way, Lucy, we've had to go around doing things and taking a more manual approach, but easing the way that people can do business from a payments perspective was the first thing we needed to unlock. And so we've been working with a number of tech companies that are growing in the space and that are starting to focus on payment rails, but also implementing our own solutions when those weren't working for us. So we're actually proud to announce that in Q1 of next year, we'll be able to have vendors pay directly through the platform in Naira. And that's something that we're really proud to be offered to the region. And we hope that it will really drive a lot more engagement and business through the platform. The second thing that we had to unlock was on logistics. We've seen that there are companies that serve the Nigerian market, shipping goods from the United States into Nigeria. But we've noticed that there was a lag, or like the rates or timeframes in which the shipments would move from the United States into Nigeria was quite slower than it should be. And so we actually to find our own transportation routes into Nigeria. It's been a very interesting experience that we've had to work and build out our own solutions. But this is something that we feel like there should be a greater emphasis on. We see that Nigeria is exploding, the population growth is exploding there, not only in Nigeria, but in other African countries as well. And so we're expecting that, you know, in the next couple of years, there's going to be a huge focus on African regions, and people really focusing on making sure that products are being driven into these countries. Now, for us, we are already focusing on that and building the rails so that people that come behind us can use our solutions to easily transact in Nigeria. One thing that we've seen is, you know, it's not only retail stores that we're working with, or businesses that trade these phones, but also corporations that use these devices for their employees, or even just to operate their businesses. And this is, you know, something that we would expect for businesses to be able to get online and purchase the devices that they need, but that hasn't been something that, you know, has built out in this space. So really, like, driving the adoption of being able to use a tech platform to go and purchase devices that you need when you need them, and being able to pay in your preferred payment method and have those devices delivered to you as quickly as possible is what we're aiming to achieve. And that it's been, I guess, an eye-opening experience, but also a very uplifting one as well, as we've seen progress being made on that standpoint. Right now, we're seeing that 30% of the volume of the entire business is going into Nigeria. And that's something that we're very proud of and a big accomplishment of us. And we want to be pushing more volume into Nigeria. In the Q1 of next year, we're expanding into other African countries. We're going to be expanding into Ghana and then also South Africa, building out the exact same rails that we've built out in Nigeria. So focusing on ease of payment and also ease of logistics. One thing that and a big accomplishment of ours this year was opening up our own warehouse facility. And I think, like, you know, just on top of having people be able to transact on an easier basis, but also delivering them a higher level of quality of their goods was something that we strive to do as well. So we opened up a warehouse facility where we were able to process and inspect these devices in-house. So our quality assurance is promised to our customers, and our defect rate has fallen to less than 1%. And so what we're seeing is, and really a big reason for the growth for this business, is that not only are we allowing people to transact easier, but the quality of our products is much higher than other people in the market. Some other things that we're working on for next year is the ability to transact using cryptocurrencies. And actually, we have the functionality already on the website. And so users can go, and if they don't want to transact in Naira or USD, but they have cryptocurrencies that they would like to use, we're allowing them to use that as well. Another thing that we're working on is for multiple languages to be translated on the platform, so that, you know, even if your native tongue isn't in English, you can still go on the platform able to transact. We really see, like, the e-commerce being the drive for economic growth in Africa, being able to access goods from around the world coming in and going out is really going to have a big impact on the growth within the African economy. And so at Easy, our goal is to make accessing these critical devices for running businesses or even just your daily lives that much easier and even cheaper. And so I really appreciate the time that you guys have allowed me to spend, and speak about our journey and our vision in Nigeria and in other African countries. And thank you so much for this opportunity to speak on this panel today.
Thank you so
Vanessa,
much, Josh.
I'll hand it back over to you.
Do you, no, I mean, technically, all I'm just gonna significantly ask you is, I think generally the one question everyone, well, most people will always want to ask is, how does it work as working from the US and here with all of the regulatory differences that happen in the country? And I know that you're very virtual about this. You're very like, oh, you do everything you do, but at the same time, you're also ensuring that Africa is also like in the like conversation. But the question would be, Josh, how can we do this better? How can we integrate better?
How can we, I guess in what sense, how can we integrate better?
In terms of like, e-commerce, we know like, there are multiple different like parts of and like essence of like what that can like, mean for businesses in Africa. But I also know fully well that you have built a business knowing like, pain points of what people were dealing with and how you were able to navigate that based off of people's pain points. However, as we are, do you have any like ideas on how we can mitigate things differently here?
Yeah. So I guess the biggest thing that we've seen is there hasn't been like a tech or I guess a
solution,
a go-to solution. I think like for personal payments, there are like solutions being built but for business related payments, that solution hasn't been built. And so you have to take very manual approaches to exchange Naira, to USD, that like it makes it tough to transact in Nigeria and not as seamless. That's something that we saw, I guess, coming in. I guess regulatory like restrictions and requirements kind of have a hand in that. But also, I don't think there's been a huge tech emphasis on, if you're transacting in large volumes of currency, how are you able to seamlessly, take Naira and turn into USD or into pounds or etc. So I think, I mean, if we were speaking to a government official, allowing for, the
would that be a
conversion
conversation that you're open to having?
Absolutely. And I think a lot of people would benefit from it on a global perspective if, transacting and converting Naira into different currencies was that much more seamless. So I think like at its core, that's where I would focus. I think the ease of payments, logistics can be figured out. And there's several logistics companies out there that we're currently utilizing. But yeah, I think the payments was something that we would like to see more of an emphasis on improving.
What's the biggest thing that is preventing you from like navigating from like a Nigerian space?
Do you mean like I guess working in Nigeria?
Living and working in Nigeria.
Yeah, so one thing we've done is we've hired the majority of our staff in Nigeria. And so we have a lot of on-ground presence from our development team, our sales team. The majority of this team actually sits in Nigeria. So we're very aware of regulatory shifts or what's going on in the actual market.
Okay. Just to round up, just to give everyone a quick roundup of like what Easy does, and just like to like everyone know, we talked about like what is nice, what is great, what is important, but just let them know like what Easy is, so that they
Yep,
also
so
know like they can easily
right.
like come in. I said easily. I did that.
Nice. Yeah, so Easy is so
just
we're
did
a
that.
B2B marketplace for new and used smartphones. But we're focusing on electronics as well. So on our platform, we connect wholesalers from all over the US who deal with smartphones, laptops, tablets, to retail stores or distributors in Nigeria. So you can get onto our platform and order from over 25 suppliers that are currently listing their inventory on our platform. So think of like an Alibaba that's focused on electronics, specifically secondhand electronics.
Lovely. Okay, here we go. And that's that. And so thank you so much. Thank you very much,
It's my pleasure.
Josh.
It's my pleasure.
This is really nice. Thank you. I'm gonna round this up and just tell everyone. So for anyone who's joined late, just joining, you joined in the middle of the situation, don't know. The point is, thank you so much for doing this. I'm gonna send you details, information on everything that has happened today. It's been 4 hours of information. It's been 4 hours of details. It's been 4 hours of like back and forth, but it's been 4 hours of significantly ensuring that not just early stage, but like every single person who knows us and who is interested in actually like using their business can actually like articulate, understand, and organize themselves. And we've never been more proud of what we've done today. That being said, thank you so much for everyone, and we'll be sending you information via email, via Instagram. Turn on your post notifications if you did not turn it on. Turn on your, like, you get emails, and all of this information is going to be sent to you anyway. And we're closing. Thank you so much, guys. We appreciate it. We could not have done this without you. We appreciate it. My name is Vanessa Junobasi. I am Head of Communications and Growth, Ingressive Capital, and convener for this event. And every single person that has been here, we appreciate you. We thank you. We love you. And yeah. Till the next one. Don't say you did not have an excuse. There's no excuse for the next one because you were here the entire time. So yeah. All right, guys. Bye, but we send this via email. Please subscribe to our emails so that you can actually get all this information. Thank you. Bye.
Thank you.